If you look at everything we've been through, it's not clear we went through a recession. So therefore, it's not really clear we're going into a recovery.
Monetary policy is getting a bit more rational, and the economy is solid, and earnings growth is likely to remain strong.
The feeling is that the path of least resistance continues to be higher.
The big problem, if we don't start tapering, whether it is in October or November or December, more likely November, December time, is the pressure of inflation.
I would watch the debt ceiling. I think you got to fear the debt ceiling. September is going to be a white knuckle event.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. A special Friday for you. John Ferro off. It's special. Taylor Riggs darkens the door. We say thank you to her for showing up on a day of Jackson Hole in the speech of the chairman of the Federal Reserve System to the known world. Lisa, I'm sorry it's not normal given where we are, where rates are, the events of the moment, this pandemic. Everyone will tune in at 10 a.m.
Absolutely. And what are the balance of risks in terms of what we're looking at with inflation perhaps overshooting, as perhaps we heard from Fed Chair Jay Powell, or them acting too soon and tightening at a time when the economy needs a boost? To me, this is a delicate balance, and the market is saying that the Fed has it right. Will he push back, though, and start to worry a little bit more about inflation?
On radio and television, whether you're work from home, work from beach, in the office, whatever it may be, we're going to have wonderful coverage. Michael McKee, with his decades of work, has put together a terrific set of voices to get us ready for the chairman's speech, and then we'll have coverage, and then, of course, we'll move into the later morning with thoughts on what the chairman has wrought. Lisa, the partition here for bond guys, and we're going to talk to a bond guy here in a moment, is taper or rates. Which are you focused on?
I'm focused on what the reaction is in markets to any kind of indication of what Fed Chair Jay Powell would like to see in the tapering. We can say they're going to probably taper at some point this year. What we can't say is what the reaction will be in bond markets, because frankly, the last time that we got a bit of a hawkish tilt in the language, or at least the perception of that, we saw actually rates go down on the long end. So does any kind of taper talk lead to higher rates this time around? To me, that is what I'm going to be watching, Tom.
And what's interesting here is the dispersion, folks, of the guesstimates for next year, whether it's at the Fed, whether it's our Michael McKee or others. Kit Jukes at SocGen with a great dispersion of 2022 GDP from 2.1% out to the 6th level. Taylor, that's the uncertainty we're focused on.
And the uncertainty, of course, that ripples through the equity markets as well. If you want to talk dispersion, I steal this from Lisa Abramowicz a few days ago. A 1,000-point difference between a low estimate and a high estimate for the S&P 500, though we migrate northward. I believe it's UBS at 5,000 for next year end. But Tom, that really speaks to the uncertainty that indeed we do see, and not to mention the equity uncertainty as of yesterday.
Well, the equity uncertainty is there, but the calendar marches on. We're into the final month of Q3, and it shapes up the mystery here, Taylor, of earnings and revenue growth. It's, if anything, more tangible than it was 90 days ago.
Yeah, well, all the analysts that we've spoken with yesterday say the fundamentals are very strong. Don't let a 10-year to 135 fool you. That's a lot of overseas buying. The technicals are very strong when it comes to the E rising faster than the P, Tom.
Oh, there we go. The E and the P. It's Friday, Taylor. No ratios. Futures up 14, Dow futures up 100. The VIX comes in a full stick from the true angst yesterday off of all that we saw in Afghanistan. 17.78 in a good point. We'll have to see how that unfolds through the morning. The yield, we had a 135.36. I'm going to call it quiescent at a 1.34, 30-year bond on that 2% benchmark at 1.93. The real yield's done nothing this week. I'll avoid it at a negative 1%. And crude, well, $72 a barrel, and the dollar is at the beach as well. Lisa, at the wall, what do you got?
The dollar is at the beach. Pretty much sums up all of markets for the past couple of days. However, I will say, just to add on to what you were talking about with markets, crude posting its best week, or poised to post its best week going back to October. And this really highlights the shift in sentiment under the surface here, that people are getting less concerned about the Delta variant prolonging the pandemic indefinitely. Today, I hear there's an event happening in about 4 hours that we've been expecting. Someone, Jay Powell, he's going to be speaking. 10 a.m. He's going to be outlining his philosophy, tends to make news on the Jackson Hole Symposium speeches. So we are looking for some sort of shift in the framework of thinking, perhaps, as I said, the balance of risks with respect to inflation and overacting too soon. Also, this is the conference about recovery in an unequal economy. How much are they going to talk about monetary policy with respect to that? 8:30 a.m., some income for personal income and spending data. I am very curious about the spending data. How much has it slowed down as a result of the Delta variant? How much do we start to see a softer tone to the third quarter? And 10 a.m., we get University of Michigan sentiment survey. Remember, the last one was a disaster. Sentiment absolutely fell out of bed, and it was in large part because of the inflationary push in consumer products. It was also because of the Delta variant and people's concern there. Do we see a reprieve from that metric? And if not, how much does that color markets? Frankly, Tom, to me, that may be the most interesting data point of the day.
It's going to be interesting to see, and, we'll get there with Michael McKee and some important conversations. I'm really looking forward to the voting member, Mr. Bostic of Atlanta, to see how he answers Mike McKee's rude questions. It is wonderful to start this historic day strong, and we do with someone that knows microeconomics. No, not the University of Chicago, not supply and demand and the Marshallian Cross, but the fish market of New Bedford, Massachusetts. James Karen grew up in the absolute sweat of one of the most mercantile mercantile towns and villages of America, and he joins us right off the whaling ship at Morgan Stanley this morning. It is supply and demand, Jim, and right now it's price up, price down, yield up, yield down. What are bonds going to do?
So that is the key question, and I agree with Lisa that it's all about rates. And Tom, I think it's time for a little bit of math, because I think we have to reverse engineer this in order to understand what's going to happen today. So when we think about the Fed funds rate and we think about the 10-year yield, what we realize is that the 10-year yield is really just the overnight interest rate reinvested every night for 10 years. Those two should be the mathematical equivalent. So with taking that as a starting point, what we have to look at then is where we expect the terminal value for Fed funds to actually be when the Fed starts hiking rates and at the point when they're done hiking rates. The Fed tells us that's 2.5% at this point. If we believe the Fed says that if the Fed funds rate gets to 2.5%, and we take that all the way back and use our fair value models, what that would tell us today is that fair value for the 10-year Treasury is about 1.7%. So that's where 10-year yields should be today if you believe the Fed's terminal Fed funds rate. The question the market is having, though, is that if the Fed starts a tapering process too soon and becomes too aggressive and maybe starts to hike rates too much too soon, then the economy will not grow as fast and the Fed will not be able to hike rates enough to get to its expected terminal target of 2.5% policy rates in the future by, say, the end of 2025. And that might only get us to about a 2% terminal rate. What that tells us then is that fair value for the 10-year Treasury, if that's the case, if the Fed hikes rates too soon, is closer to 1.3%. On the other hand, if the Fed waits and delays the taper and allows there to be more stimulus in the economy, then 10-year Treasury yields could rise as much as could go towards 2% by the end of this year. So the whole key here is, and this is what's very, very counterintuitive, is that the earlier the Fed tapers and the more aggressive they are in tapering, 10-year Treasury yields probably will not rise that much.
Well, Jim, hold on a second. I want to underscore this. I want to underscore this because this, to me, is one of the key debates on Wall Street right now. What is the reaction in bonds to any potential taper announcement? You're saying they will go lower unless the taper is prolonged, unless there is a much slower pace. So do you expect that to be the case, given the fact that right now we hear an increasing number of members, voting or non, talking about the necessity to start withdrawing stimulus?
Yeah, I do, because effectively what we have to recognize is that we have to close the output gap very, very quickly at this point. So if we don't get enough growth in the future, right? So you mentioned earlier on in the show that there's a really broad range of GDP growth forecasts for 2022. If we're at the low end of that GDP forecast, then we're just not going to get enough. We're just not going to get enough economic activity for the Fed to continue. So what the market is arguing, and this has been the case really since the June FOMC, is that if the Fed starts a tapering process too soon and it's too aggressive, then they're just going to not be able to hike rates enough in the future, and that's going to influence the level of 10-year yields today. So it's not that yields don't rise today if the Fed is very, very, hawkish on things, sure, but it just won't rise that much, and then it could settle back down to a lower level. But if the Fed's a little bit more dovish today and allows for this generation of growth and inflation and what have you, then the 10-year yield term premium will be rebuilt into the curve, and that will allow 10-year yields to actually rise more. So it's very, very counterintuitive. So it's not a taper tantrum in any way. Really, the more dovish the Fed is, the more likely it is for rates to actually move, 10-year yields to actually move higher.
Jim Karen, we're going to have to leave it there, but I just really want you to know, Jim, we're watching auction prices in New Bedford like you did as a kid. Scallops in July, it was a scandal. $30.80 a pound on scallops. Young Karen was down there as a kid figuring it out. Jim Karen, thank you so much with Morgan Stanley. Really, really quite good on both sides of the bond market as well.
What have you been doing this summer? Lobster rolls? Scallops?
Yeah, well,
and bring out my little violin.
With seafood as well. I grew up on fish sticks, like in a little plastic. I grew up in the Midwest, where fresh fish was a once-a-year occurrence. I mean,
fish sticks. Yeah, fish sticks and tang.
Unfortunately, that's true. Good to hear from Jim Karen there. But Lisa, seriously, Mike McKee's got a great lineup of people to really add some perspective on the challenges the chairman has.
And we've heard an increasing sort of drumbeat of people saying that the Fed will probably taper more quickly than people expect. Yesterday, Greg Jensen of Bridgewater coming on Bloomberg Television and talking about that. And I do wonder if that means lower yields ahead and whether that continues to be the pain trade, Tom, given the consensus that they will continue to go up.
Futures up 15, the VIX 17.77. Stay with us. This is Bloomberg. Good morning.
With the first word news, I'm Rich Gupta. President Biden is telling terrorists the U.S. will hunt them down. The president spoke after bombings outside the Kabul airport killed at least 13 American service members and dozens of others. Islamic State has claimed responsibility for the attack. A divided U.S. Supreme Court has lifted the Biden administration's moratorium on evictions that ends protections for millions of people who fell behind on their rent during the pandemic. Justices said landlords are suffering irreparable harm. They also said that the CDC lacked the authority to impose the eviction moratorium. President Biden's advisors may recommend that Jerome Powell be nominated for a second term as Fed chair, while Lael Brainard would be the central bank's vice chair for supervision. Brainard is also a contender for the Fed chair position, but elevating her to vice chair could ease concerns of progressive Democrats who don't like Powell's record on regulation. China reportedly is taking steps that could thwart the ambitions of tech firms that want to list abroad. Dow Jones reports that the government plans to ban companies with large amounts of sensitive consumer data from going public in the U.S. The move could give Beijing more control over the complex structure Chinese tech companies use to sidestep restrictions on foreign investment. And it's a victory for Apple over critics who say the company has too much power. Apple has settled a wide-ranging class action lawsuit with U.S. app makers, but it did so without agreeing to major changes to its policies. Apple will pay $100 million in settlements to developers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Those who carried out this attack, as well as anyone who wishes America harm, know this: we will not forgive. We will not forget. We will hunt you down and make you pay.
The President of the United States in a most difficult Thursday in America. Let's get right to it. Our Emily Wilkins joins us with Bloomberg Government. Emily, below the tomb of the unknown soldiers at Arlington is Section 60. It's on the plains, the field there, the flatness before the Pentagon. And in Section 60 is where they bury people from Iraq where they bury our brave from Afghanistan. I am most certain the president will visit Section 60. All of this emotion of the last 24 hours, discuss what you learned yesterday about the mood on the Hill, the mood at the White House.
President Biden said when he initially started talking about pulling out of Afghanistan that what he did not want to do is that he did not want to call another soldier's family who died in Afghanistan and give them the bad news. And now he's going to have to call 13 families. Far more wounded, far more, dozens and dozens of Afghanis wounded as well yesterday. And we're hearing now from U.S. Central Command that there could be more of these attacks. Tom, this is the last thing that President Biden wanted to have happen here. The administration was banking on getting everyone out, on saying, look, we evacuated, there were no deaths, and now we've ended this 20-year war. And now they're going to have to contend with the fact that at least U.S. soldiers died, and maybe we'll see. There is a chance that American citizens, they're still in grave danger over there.
The president has to get not so much beyond a 20-year war, but get to the next 20 hours of his tenure, which means maybe to the Sunday talk shows to stretch it out a little bit. What is the White House doing this morning in triage?
Oh, this is going to go way beyond the Sunday talk shows. I mean, you saw Biden yesterday step up with a message saying that, as the clip you just aired, that, they would be going after the people who had this bombing, that the U.S. would be attacking them and retaliating against them. But the fact of the matter is that this is not just going to go away after this weekend. I mean, Democrats on the Hill, people from his own party, have vowed to hold hearings getting to the bottom of this. I've spoken with Republicans on the Hill who say if they take the House in 2022, which is very likely to happen, they want to have further investigations on this. This is something that could dodge Biden for the rest of his presidency, really.
There's also a question about the U.S. and their negotiating with the Taliban and how much the Taliban is partnering and to some degree, or at least allowing Islamic State to be engaged and active in Afghanistan. Emily, do we have the latest on that? To me, that is highly unclear.
There is a lot of concern about that. Reports yesterday saying that the U.S. actually handed a list to the Taliban of Americans that should be let into the airport. That raised a lot of concerns, especially on Capitol Hill. You're actually beginning to see some rank and file Republicans begin to call for President Biden's impeachment. Now, that's not something we're seeing from Republican leadership at this point. We did hear yesterday from House Republican leader Kevin McCarthy saying that Congress did need to come back to Washington, that they needed to be briefed, and that they potentially needed to move to make sure that troops are in Afghanistan after that August 31st deadline.
Emily, there's the political machinations and sort of the politics of trying to say, look, this is terrible, and to paint it in a bad light. And then there is the military precision of trying to understand what went wrong, what was potentially on the shoulders of President Biden in terms of not foreseeing how messy it could get. When you talk to former commanders, former military heads, what do they say in terms of what went so wrong?
I mean, it seems like we're getting some conflicting messages from military commanders, because there's some that were saying that they said always from the start that this was going to be a messy withdrawal. But then you've heard others say, that they thought that this would be possible. I mean, the messaging that you heard from President Biden in the months leading up to this is that something like this was not going to happen, that the U.S. was going to have the withdrawal under control. And I think that's what's really shaking a lot of confidence here in Biden's ability in Washington, D.C. and throughout the country, really. You've seen his approval ratings drop, and that's going to have implications for what he's going to be able to do with the next 3 years of his presidency.
Emily, following up on Lisa's question, we are relying on one terrorist group to protect us from the other terrorist group. General McKenzie spoke yesterday at 3 p.m., and we took it live on television. The Taliban is supposed to provide a front line of screening. Somehow that suicide bomber got through and got to the American second line of defense. Do we trust the Taliban that they aren't letting those suicide bombers through?
at this point, I think that raises serious questions about how the U.S. needs to work, if they can work, really, with the Taliban. And you heard the Taliban, when they were asked about it, just turn right back around and blame the U.S., saying, well, this happened in the airport, in the U.S. portion of the controlled airport. Of course, the Taliban was responsible for some checkpoints previous to that. I think, as I mentioned earlier, as you saw yesterday, that there is concerns that there are going to be more of these attacks, that they are actually expected. And yesterday you did see the U.S. warn Americans to stay away from the Kabul airport because they had gotten intelligence about these attacks. You did see evacuation efforts continue after, but this is very much an active threat and something that we really need to keep a very close eye on for the next several days.
Are the approval ratings more than just Afghanistan?
Well, we also believe that they probably have something to do with the Delta variant, because remember, President he really came out the gate talking about attacking the COVID-19 virus, about helping the country get over that hump. For a while, it seemed like that was happening. We had mask mandates that were dropping. We had people being vaccinated. There was a huge focus on shots in arms. And now, even if you're vaccinated, in many places, you have to wear a mask again. And so that's something that the administration is also dealing with, rising numbers of unvaccinated people in hospitals, mask mandates coming back. So there's certainly that. There's right. Afghanistan. And I think at this point, you're seeing a lot of rockiness with getting his big domestic agenda through Congress as well.
Emily, thank you so much. Emily Wilkins, a difficult Friday in Washington. We'll have much more coverage of this through the morning, and certainly the news flow out of Kabul today as well. We have so much coming up on Afghanistan. Benjamin Hopkins will join us with George Washington University. Really looking forward to that. Thrilled that General Kimmett will join us here in the 7 o'clock hour as well. Lisa, on Jackson Hole in all, I really can say I can't remember a speech that was so anticipated.
Yeah, the idea that someone's looking for the balance of when they might taper, and frankly, what ramifications that'll have on markets. Tom, I don't have a sense of that. There's a lot of disagreement even with how much these asset purchases are continuing to prop up asset valuations.
The ramifications to the markets are important, and also the ramifications of distraction. As you know, folks, we do have a surveillance cat, and I'm thrilled to tell you, Bill the cat is wired up right now, awaiting Chairman Powell. Bill the cat's got, look at this. It's high tech, folks. I mean, the drain of electricity to get Bill the cat fed before Chairman Powell is absolutely extraordinary.
If anyone's trying to follow this, don't worry. We don't necessarily follow this either.
That's
Tom,
okay.
Well done.
All cats. I love
Chairman
cats.
Powell and presidents and governors of the Fed with our Michael McKee coming up. This is Bloomberg. Stay with us. Bill, you too. Bloomberg Surveillance. Good morning, everyone. The chairman's speech coming up at 10 a.m. in a moment. We have an important scholar on what we're observing in Afghanistan. Right now, our Taylor Riggs looks at the markets.
It was interesting, Tom, yesterday after the bell. Certainly a decline, big decline in some of the equity markets. Today, of course, we try to get a ripple effect and a bounce back upwards as some of the calm, of course, shakes through here. It's interesting, though, that you didn't see the unwind yesterday filter through within the markets, as you have a very steady, well-behaved 10-year yield at a 134. You changed the board, though, and Tom, I did this for you. You taught me this 10 years ago. The minute the equities sell off, what are cross assets doing? You didn't see the safe haven Swissy or the yen catch a bid. That was the telltale sign that, of course, we're starting to see at least some calmness return to the markets. Let's change the board. One thing where you're not seeing calm, take a look at shares of Peloton. We did this after the closing bell yesterday. At one point, shares were off about 15%. I hear there is a restatement of the financial balance sheet given an accounting error with inventory. Tom, that is level 2. You have to account the inventory correctly. That is
Friday
all.
Morning, and I'm getting Riggs lectures on level 2 CFA. Only Taylor Riggs can do that. Thank you, Taylor Riggs. I appreciate that. If you are ever so fortunate at George Washington, you can look at select courses from Benjamin David Hopkins. He is shockingly definitive, not so much on Afghanistan, but the sprawl of Central Asia. His book anticipated the war that destroyed America, and we are thrilled that Professor Hopkins could join us this morning. Professor Hopkins, you teach on Asia thought as well, which alludes back to the horror of the end of World War II. Whether it is kamikaze or suicide bombing, how do we defend ourselves against such terror across Asia?
Well, specifically looking at Afghanistan and the events of the past 24 hours, Tom, that's a very complicated question, and I've been watching your reporting about the continued threat that it poses and how the U.S. military is trying to respond to that. I think that's part of the reason that the Biden administration has been so firm in deciding and doubling down and then tripling down on its decision to get out, that the best defense against that at this point is not to be there at all.
I find, Ben, it's so important is in every expert we speak to on the Sunni Shia tension of the Muslim world, they say, you know what, it's really not a big deal with the Taliban, but ISIS is separate. How alone is ISIS or ISIS-K in Afghanistan at this moment?
That's a great question, Tom, and it's a great observation as well. As you rightly point out, most scholars note the lack of sectarian violence, Sunni Shia violence in Afghanistan. There are, of course, exceptions to that, and there have been points in history where that has not been the case and there have been violence. But especially if you compare it to neighboring Pakistan, where sectarian violence is really widespread, it is notable. And part of ISK's proclivity towards violence, including sectarian violence, is informed by the fact that they largely come out of Pakistan. In terms of how alone, as it were, ISK is, we need to remember that between roughly 2015 and 2018, at the same time the Taliban was waging an insurgency against the Afghan government and its American allies, it was also fighting a war against ISK, which the Taliban essentially won. I mean, the Taliban essentially eliminated ISK from Afghanistan. So these two do not get along by any stretch of the imagination.
But Ben, honestly, it seems like there are different factions within the Taliban. It's hard to talk about the Taliban as a united front. I mean, how much is this a cohesive group against ISIS, against ISK, versus perhaps a splintered entity that could potentially foster some of this more terroristic sentiment in the nation?
Another great observation, Lisa. Yeah, I mean, that's one of the issues that needs to be underlined right now, is that it's in many ways a very perilous moment for the Taliban itself. Our view inside the Taliban, I think, is rather limited, but it's definitely racked by tensions, if not fragmented. Now, the last time we saw the Taliban in a similar situation, which was in 1998. In 1998, the Taliban had just taken Mazar-e-Sharif in northern Afghanistan, the last major urban center. It controlled 90% of the country, and it was waiting on foreign recognition. When that recognition did not come, say for Pakistan, the UAE, and Saudi, what we saw within the Taliban at that point was that a more radical faction became ascendant. So we could definitely see something similar playing out in the days ahead.
Taking a step back, Ben, a lot of people say, why do we care so much about this nation aside from a humanitarian point of view, aside from perhaps the fact that we have been so involved and the history going back to 2001? Is there a larger strategic place that this nation holds in terms of geopolitical relations that you're concerned about going forward as we see the devolution into absolute disarray?
So Americans often mistakenly think that Afghanistan itself, if not our relationship with Afghanistan, began in 2001. Actually, the United States have had documented relations with Afghanistan back in the 19th century. It's really actually amazing how foreign Afghanistan remains in the American imaginary, even though we have such a long history with it. In terms of the present possible strategic value of Afghanistan, Afghanistan's curse and its key asset has always been its location. That if really overland you want to get any place in Asia, you have to go through Afghanistan. And indeed, that's why there's so much talk right now with the American withdrawal that perhaps the Chinese will step in and entail Afghanistan as part of their Belt and Road Initiative.
Talk to me about that exactly. The Belt and Road Initiative goes through Pakistan, and we hear, $1 trillion worth of rare earth minerals in Afghanistan. Is China going to try to do what we could not?
I think you will see a great deal of speculation about that, especially by more contemporary analysts. Personally, I'm quite skeptical of that. So if we take the number of the $1 trillion of mineral wealth in the country, the first thing we need to acknowledge is that it's highly diffused around the country. There's very few actual concentrations which make it economically feasible. And then secondly, the infrastructure to exploit it is not there. There are a couple of examples of the Chinese investing, for instance, in the IMAC copper mine. However, that really is not a big economic driver, as it were. I am actually personally quite skeptical that China will see much value of stepping into Afghanistan at this point. The kind of rate of return on investment there, as has been demonstrated, is actually quite low.
Big picture, Professor, and I'm just thinking perhaps maybe in the near immediate, does the Taliban have an incentive to help us get out safely?
Yeah, the Taliban wants us gone. I mean, it's wholly within their interest, which is why I think that the Taliban is as upset with the events of yesterday, perhaps as we are. I mean, if you think of it kind of from a rational actor point of view, the Taliban's interest is to have the United States and its allies as gone as quickly as possible. The Taliban has experience of being on the receiving end of U.S. military technology, and it has really nothing to gain at this point in doing anything that would purposely delay the American withdrawal, especially when they have a president and an American administration that has so firmly said we're out on August 31st. So I'm sure the Taliban is as upset with these events of yesterday as, for different reasons, as the United States. Certainly, ISIS is playing the role of spoiler here.
Ben Hopkins, thank you so much. Greatly appreciate you starting your morning with us. With George Washington University, can't say enough about his expertise on Central Asia. We've got lots more coming up. I really want to emphasize a conversation to come up in the 7 o'clock hour, I believe on the backside, with General Kimmett. Mark Kimmett, I've just asked for, and we're thrilled we finally get him on this morning and after this very difficult day yesterday as well. Lisa, I want to go to the bond market where we've got some real stasis, and I like what you said about the ambiguity. I mean, there's just a major mystery about those headlines at 10 o'clock that Mike McKee will explain.
The idea also of how the Fed is going to frame this. I mean, everyone's focused on the tapering debate, and yet the theme of this conference is macroeconomic policy in an unequal recovery. I have to say, Tom, some of the academic research coming out is fascinating, including one bit of research from Princeton's Atif Mian, among others, taking a look at how low rates actually increase, that inequality can actually directly go toward lowering rates. And you can get into this vicious cycle where basically inequality begets low rates beget more inequality, and vice versa. How much are they going to focus on some of these aspects that have a direct effect on the bond market? I know you think it's probably esoteric for me to be talking about this.
No, I think it's in the papers. It's in the papers. It will be important within the papers.
I think so. And perhaps we'll color their views.
And we'll see what they do, folks. And of course, it's going to be virtual, which is different, but they'll have 1 or 2 or 3 authors, and they have a so-called discussant, which is just some fancy superstar that we like to talk to, and then they argue. And, I'd say, it's not every year, Lisa and Taylor, but it's like once every 3 years, somebody goes mental and starts screaming.
Well, and the concern, I think, this time around is that markets are thinking it's virtual and maybe some complacency. And Tom, I think we all know that the last 18 months have been virtual, and there has not been a lot of complacency. So
there's the acclaimed 8-foot bear standing up outside the meeting room at Jackson Hole, and somehow the bear isn't virtual this morning. Neither is our Michael McKee. He will be with us in studio with wonderful guests, including Rafael Bostic. Stay with us with futures up 14, the VIX 17.84. This is Bloomberg.
With the first one news, I'm Ritika Gupta. President Biden and Israel's Prime Minister Naftali Bennett will meet at the White House. That's a day after the original meeting was delayed following the bombings in Afghanistan. The two are expected to discuss their divergent approaches on Iran. The U.S. favors a diplomatic agreement to stop Iran's nuclear program. Israel has said it may use secret attacks. A new study looks at vaccines versus infection when it comes to immunity from the coronavirus. The Israeli study says that people who recovered from a bout of COVID early in the pandemic appeared to have a lower risk of contracting the Delta variant than those who received the Pfizer-BioNTech vaccine. The results are good news for patients who are already successfully battled COVID. China has issued its most comprehensive warning yet against the excessive work culture of big corporations. Authorities spelled out how the so-called 996 practice is illegal. That is, working employees from 9 a.m. to 9 p.m. 6 days a week. There's been a growing backlash in China against the punishing demands of the private sector. Earnings at HP and Dell show that the personal computer market is being hurt by chip supply problems. HP executives say they couldn't meet all PC orders they received in the July quarter. Dell was more bullish about the outlook. Still, the company said it was struggling to get all the chips it needs. And Peloton is going downscale. The company whose exercise bikes have become a symbol of affluence is cutting prices to speed up a push into the middle class. Peloton has slashed the price of its most popular bike by $400 to just under $1,500. The company's fastest growing consumer segment is people under the age of 30 and those that make less than $50,000. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We will be able to take the masks off much of the time in the future once we get to a point where we're sort of in a steady state and we have people protected against the severe complications. Right now, we still have 20% of Americans over 65 who have not been fully vaccinated, and that's a big gap that we need to close.
Stuart Ray on infectious disease with Johns Hopkins, really quite accomplished. Is there all there, all the other universes that we speak to as well? We say good morning to you. Much going on, including as we tilt to 10 a.m. Eastern time in the speech of the chairman of the Federal Reserve System. We're looking at the markets. Futures up 13. Taylor Riggs in for John Ferro, Lisa Abramowicz, and Tom Keene. Thank you for being with us. On the pandemic now, Andrew Pekos joins with the Bloomberg School of Public Health in Baltimore. We should note that Mr. Bloomberg is, of course, a supporter of this TV and radio operation, as he is of the good University of Baltimore. Andrew, I got an email yesterday from Ken Langone in New York University getting me ready for my booster shot coming up. Is the booster shot we're anticipating the same as the measles, mumps, rubella booster shot or all the other booster shots of our childhood?
The principle is really the same. It's to make sure that your immunity is not only boosted, meaning that your immunity in the immediate time frame is higher and stronger than it was pre-boost, but there's a lot of data that suggests that that booster shot will also improve your memory responses, meaning that your immune system will improve the number of cells that are present that will then be able to respond to a future exposure to the virus and therefore make you even better protected against infection. So booster principles there are the same way. The benefit is going to be for immediate protection, but also for longer term protection.
Can we basically come to the conclusion that the vaccines as they are now are not sufficient to block out the Delta variant when you see a place like Vermont with such a high vaccination rate is seeing cases go up at such a dramatic pace?
I think vaccines need to do two things. First and foremost, they need to protect against hospitalization, severe disease, death. And the vaccines in the U.S. are doing that even against the Delta variant. We're seeing increases in the amount of breakthrough cases that are symptomatic in vaccinated people, but we have to put that in context. The vaccine is still providing great amounts of protection against infection, and this surge in cases is really being driven by unvaccinated people here in the U.S. Now, that's not to minimize the fact that Delta is a much more aggressive variant than any previous ones, and it's challenging our vaccines in a way that we really didn't think was possible a few months ago. So Delta is stronger. It's making inroads into the vaccinated population, but the vaccines are still holding up.
Okay. So we're talking a lot about vaccines and who can get vaccinated, and the kids who are under the age of 12 cannot, and we're about to go back to school, most kids across the United States at a time when we have this really infectious variant that is spreading wildly. We also are hearing reports that kids are getting sicker with this variant. What's the latest on that?
Yeah, and the news is a little bit concerning. CDC also came out with new numbers this week that suggested that the infection rate in children and even adults under the age of 20 or so is really driving the number of cases in the U.S. right now. So we're seeing Delta variant penetrate into younger populations more effectively than previous variants, and we're seeing it cause a greater degree of disease. Meaning, we always expected a certain number of cases of severe disease in younger populations. That percentage seems to be increasing with Delta variant. So it does seem like this virus is more transmissible, can cause more disease in younger populations. And Lisa, like you said, we're gearing up to get back into schools at a time when vaccines are not available in a wide enough portion of that population to really provide that extra level of protection. So it's a concern going into the fall.
What is the data? What is the science? What is the guidance on getting vaccines to those under 12, under 16, you name it?
Well, those clinical trials are underway. They were delayed a little bit because the FDA wanted the companies to add more children to the study to really get a handle on some of the adverse effects that were penetrating in older populations. So they really wanted to get a handle on the safety issue in the younger populations. There are also issues with dosing of virus and different dose of vaccine, I should say. Different doses are being given to those populations to try to see what the best dose is. So there's a lot of science and clinical work that has to go into getting this right because, again, these are our children, so we really want to make sure that the safety and the efficacy is even higher than what we did for the adult population.
Does the full FDA approval that we got on Monday and the upcoming expectations of the next FDA approval of the next vaccine, does that change the game on the margin?
I really do hope so. The data that led to the full approval of the Pfizer vaccine and the data that will lead to the full approval of the Moderna vaccine has been out there for months. We've seen it. It's fantastically good data in terms of safety and efficacy. And this full approval, I really hope, will drive not only more people to really sort of reconsider their decision not to be vaccinated and go forward with it, but at the end of the day, it may also validate mandates for certain types of work, certain types of activities, because we have the data. It's clear the vaccines are safe and are working. We need to use them more efficiently and more effectively to get this pandemic under control.
Dr. Pekos, thank you so much. Andrew Pekos with Johns Hopkins University. Lisa, the ballet here in Jackson Hole is there's a separation of the speeches, including international central bankers and the chairman and all that. And there's a lunchtime speech under the beautiful white tents. And then there are the papers. And the Kansas City Fed's tradition is to keep the papers under wrap to the point where we don't even know the agenda until last night. I'm thinking it was 3 p.m. I can't remember.
I think it was 7 p.m.
And we don't even see the papers until they come out, which drives me absolutely nuts. Having Gita Gopinath on of the IMF is always a treat. She's just absolutely fantastic. But all of a sudden, if you say it was 7 p.m. last night, my must-read paper is Blinder Gopinath Leeper. This is Eric Leeper of the University of Virginia. This is his wheelhouse, fiscal and monetary policy, with the former vice chairman of the Fed and Ms. Gopinath. Lisa, I'm really going to look at that.
Yeah. What I think is actually interesting is that this meeting arguably could be more important to the rest of the world than even the United States. Arguably, tapering at this point in the path of it will have a more dramatic effect on other developed and developing nations. And we hear that from Philip Lane over at the ECB earlier this week, where he was saying that they are gearing up for potentially responding to any fallout from what the Fed does. I mean, just to give you a sense of how closely all of the international community is watching this meeting and what Fed Chair Powell has to say.
Well, so did Damian Sassower, president of Bloomberg Intelligence Emerging Market Analysis. Sassower says, look, Powell is the central banker for these emerging markets, looking at incredible yield differentials versus the United States. Futures up 13, a most special Friday morning. Stay with us through the morning. This is Bloomberg on radio, on television.
If you look at everything we've been through, it's not clear we went through a recession, so therefore it's not really clear we're going into a recovery.
Monetary policy is getting a bit more rational, and the economy's solid, and earnings growth is likely to remain strong.
The feeling is that the path of least resistance continues to be higher.
The big problem, if we don't start tapering, whether it is in October or November or December, more likely November, December time, is the pressure of inflation.
I would watch the debt ceiling. I think you got to fear the debt ceiling. September is going to be a white knuckle event.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television. A different Friday. It is a Friday of Federal Reserve and economics. We'll have full coverage through the morning as well. John Ferro off, Taylor Riggs in this morning. We are thrilled by that with Lisa Abramowicz. Of course, Lisa, it is a big day.
It's a big day, and I think that arguably the biggest aspect of it is the reaction to what Jay Powell says. He is expected to signal some sort of time frame for the taper discussion, and we do expect it to
he's
happen.
Going to actually come out with a month, a date, an hour, a minute, a second.
Yeah, I think that's exactly what's going to happen.
Thank
no,
you.
of course he's not.
I
He's
haven't
gonna
had
come
my
out.
decaf chai.
Evidently, you've had 2 decaf chais and it's off the hook. But I do think going forward, there is a question about the response in bond markets. And I think Jim Caron nailed it earlier when he said that if they announce an earlier and faster taper, as many people expect them to eventually do, not today, but eventually, that will actually lead to lower long-term yields. This is against what a lot of other people are saying, Tom.
Yeah, and it gets out to the terminal yield, if you will, and the mathiness. Tailored to the mathiness of that, there's the Fibonacci 4 ideas that make up the yield. And to me, the immovable force here is the microeconomics, the liquidity wall, which means price up, yield down.
Except that in the credit markets, it's been going the other way. We just came off of 7 straight weeks of rising high yield credit spreads. That's the longest streak going back since 2013. Interestingly enough, though, on the afternoon, guests have been coming on and saying, oh, good, now it's a buying opportunity.
Yeah.
But you do wonder when some of the economics fold through within investment grade, within high yield, and as you say, the squishiness with spreads rising.
We interrupt our team coverage of Jackson Hole and the Federal Reserve to go to Abramowicz on high yield. Lisa, this is your wheelhouse. Is Riggs right?
Yeah, well, yeah. I mean, but recently we've seen she's exactly right. Part of this has to do with oil, right? Part of this has to do with the fact that oil was selling off and now it rallied and it's poised for its biggest rally.
So wait. Oil rallies, so junk oil paper goes price down, yield up. Is that how it works?
That's been the opposite. That basically when it sells off, that you get that. It's okay. You're doing great. I think the bigger picture here is that so far it's been considered a tactical play, and it has to do with issuance. I think there is a bigger question here. Corporations are doing phenomenally well. That seems to be the feeling across the board, and yet the fundamental economy still has some pretty big potholes, and that is sort of the needle that Fed Chair Powell has to thread this morning.
Well, we will see. And of course, the paper's out. Michael McKee will have a terrific set of presidents of the Fed, and I'm thrilled to say he'll begin strong with Mr. Bostic of Atlanta. And let me tell you, Mr. Bostic on fire this morning with comments about the math forward for the presidents and governors and indeed the leadership of the Fed. Let me do a data check right now. Allow Lisa to get in the golf cart and get over to the wall. Futures up 13, Dow futures up 86, the VIX 17.85. The yield, it's in a little bit from a 136. And of course, some real angst in the market yesterday after the tragedy in Kabul, 134, and the 10-year yield. Oil, it's there, $72.12 on global Brent crude. That gets my attention a little bit. Gold wandering near 1800 the ounce. Good morning, Dennis Gartman. And the dollar, 93 level on DXY. The euro, 117.59 as well. Lisa, your thoughts this morning?
Jackson Hole Symposium is going to be very much front and center. Fed Chair Jay Powell is going to take the stage at 10 a.m. to give his speech. I really want to go back to this point of the dual economic recoveries. That is the theme of the entire conference, but it really goes to the feeling that we're getting in markets, that everything is booming, that companies cannot earn enough money, and they are just absolutely raking in the cash, whereas there still is quite a bit of pain both in the labor market and beyond, particularly with respect to higher consumer prices that are definitely bleeding into sentiment. How does he cross-reference these two? What is the relationship between markets and the real economy, and which one is he focused on more? 8:30 a.m., we get some personal income and spending data. We expect income to actually go up because of the child tax credits that came in. Spending is what I'm watching. How much did spending on services decline as people cancel restaurant reservations or cancel trips because of the Delta variant? We've all heard about it, and frankly, we are not in Jackson Hole right now enjoying the burger that you keep talking about, Tom, because it was canceled because of the Delta variant. And at 10 a.m., again, I really want to harp on this particular data point. University of Michigan sentiment survey comes out. We saw a plunge.
Rolling over a little, yeah.
This, to me, is going to be really important. How much does sentiment continue to deteriorate? How much are people sort of getting used to the idea the Delta variant is another crimp in the recovery, but we're getting there? How much do people sort of shrug off those higher consumer prices as transitory, as Fed officials are saying? Those are really key factors, sentiment driving a lot of what's to come. Tom.
Really glad you did that with a rollover in consumer sentiment. You saw that with, I believe it was Southwest Air folks, with 2 tranches of fewer flights to be flown into the autumn and into the winter. Anastasia Amoroso is with iCapital Network. She is viscerally hardwired to EM into away from the G5, the G3, the G2. She provides terrific perspective, yes, on economics, but across into what people actually do with their money. Anastasia, I want to go to the surprise of your research note, which is you say it's 2006. There's a desperation out there for yield. And the reality is people are looking anywhere they can for yield, private lending, direct lending, whatever you want to call it, private credit, whatever. Is it 2006?
Well, good morning, Tom. It's certainly reminiscent of it. But to go back to your yield question, as Lisa characterized some of the high yield environment, the reality is spreads are really tight in the publicly traded high yield markets. And maybe they're picking up a little bit, but they're still 4.6% on U.S. high yield, which is really near record lows. So this is why, Tom, we are thinking about what are the other opportunities outside the publicly traded high yield markets, and we are looking to private credit. So if you think about private credit, most of it is actually floating rate. So the reason I think this is a very interesting opportunity right now, fine, Fed does not taper at Jackson Hole. Maybe they don't even hit it September, but we know that tapering is inevitable. And after tapering come the rate increases. And the consensus right now is not really baking in any sort of meaningful, measurable rate hikes until sometime in 2023. So the thing that I worry about, Tom, is that if this economy continues to pick up and inflation continues to stay well above 2%, in fact, well above 3%, then the Fed is going to have to move sooner and perhaps more on rate increases than the markets are currently pricing in. And this is why we're looking to the private credit market, where I can get that floating rate exposure and I can get a yield that is LIBOR plus 500 to 800 basis points
come
over.
on.
Yeah, but
that is not what you're getting in the public market.
Lisa, I was sitting with Afterthought at dinner last night, and Afterthought's talking to me like Anastasia about LIBOR plus 300.
Yeah, it happens frequently.
Come on.
Yeah,
LIBOR plus 500?
Yeah, very frequent conversation about the increase in allowance. But Anastasia, there is a question about what potential consequences there are for maintaining these policies for a prolonged period of time with some of the easiest financial conditions in history during a boom economy. And I wonder, moving away from the technicals and 500 over LIBOR, the idea of the use of proceeds, what you're seeing in the private credit world, what you're seeing in the public high yield debt markets, is there starting to appear a sign of froth in terms of why companies are borrowing and how they're using the money?
Lisa, there's definitely been a record amount of fundraising. There's a record amount of liquidity, whether you look at the SPAC market dry powder, whether you look at the private equity market dry powder. But I would say this is an economy that is on very solid footing. And this is an economy where innovation is humming. So there is dry powder that's chasing the increase in innovation. And I don't necessarily think that that's the sign of froth. The other thing that I would point to, Lisa, you talked about record corporate profitability. I mean, corporates are in great shape. Leverage ratios are down in most sectors. You had net margins that are at record levels. So if this was not the case, I would maybe say, yes, I'm worried a little bit about the signs of fraud, but that is the case. And speaking of liquidity, let's talk about buybacks. Corporates have authorized a record amount of buybacks year to date, over $600 billion, and they're slowly executing that. So look, this is an environment where liquidity is abundant, and until that gets drained out of the system, and or until something unpredictable tips us into a much worse economic environment, I think this market, whether it's in the public markets or private markets, I think it goes on.
Quickly here, is the taper tantrum behind us?
I think it is, Taylor. If the Fed does actually taper, I think is going to shock no one. Of course, what was so shocking in 2013 is that it really did seem to come out of nowhere. And when the Bernanke mentioned that they may actually taper back the purchases, we've been talking about tapering for the bulk of the summer. So I think it's going to shock no one. The other thing I go back to is what Robert Kaplan said about what the QE purchases are actually meant to do. They're meant to stimulate demand in the economy that was recovering from the COVID shock. We do not have a demand problem in the economy right now. We have a supply chain bottleneck problem. So I think the markets would actually take that in stride, the fact that we're pulling back the purchases as demand is strong.
Anastasia, we got to leave it there. Anastasia Amoroso, thank you so much. Greatly, greatly appreciate it with iCapital this morning. Lisa, all my radar is up on going out to credit, going out to get another 100 basis points of yield. I think I've seen it before.
Yeah, triple cash going into
Triple
credit.
cash
When you start going into credit, that will be the top.
Yeah.
Just let us know.
Yeah, it's just way too risky. I have a comfort with the triple leveraged all cash fund. Stay with us this important Friday. Michael McKee to be up in a bit. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. President Biden is telling terrorists the U.S. will hunt them down. The president spoke after bombings outside the Kabul airport killed at least 13 American service members and dozens of others. Islamic State has claimed responsibility for the attack. A divided U.S. Supreme Court has lifted the Biden administration's moratorium on evictions. That ends protections for millions of people who fell behind on their rent during the pandemic. Justices said landlords are suffering from irreparable harm. They also said the CDC lacked the authority to impose the eviction moratorium. Moderate and progressive Democrats are on a collision course over how to pay for President Biden's economic agenda. The president has proposed tax hikes on wealthy households and corporations to pay for trillions in new spending. Progressives are actually seeking more. But moderates want fewer tax hikes and are hesitating on some of the spending. That's where the fight will come in starting next month. China reportedly is taking steps that could thwart the ambitions of tech firms that want to list abroad. Dow Jones reports that the government plans to ban companies with large amounts of sensitive consumer data from going public in the US. The move could give Beijing more control over the complex structure Chinese tech companies use to sidestep restrictions on foreign investment. and a victory for Apple over critics who say the company has too much power. Apple has settled a wide-ranging class action lawsuit with US app makers, but it did so without agreeing to major changes to its policies. Apple will pay $100 million in settlements to developers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We will not be deterred by terrorists. We will not let them stop our mission. We will continue the evacuation. I've also ordered my commanders to develop operational plans to strike ISIS-K assets, leadership, and facilities. We will respond with force and precision at our time, at the place we choose, in the moment of our choosing.
At the place we choose, the President of the United States speaking on yesterday's most difficult day for the White House and for all of America. We say good morning to all of you. Taylor Riggs in for Jonathan Ferro with Lisa Abramowicz. I'm Tom Keene. We are focused on the chairman's speech at 10 a.m., but right now we focus across the north lawn of the White House to a most difficult Friday for a president. Our Anne-Marie Horton is at the north lawn, and Anne-Marie, I looked it up. Charles Dickens, visiting that north lawn in 1842, said there was no confusion or disorder. Measure the confusion and the disorder at the White House this morning.
Well, Tom, as you said, yesterday was a very, very difficult day, and you really heard that in the president's speech. He said he is both outraged and heartbroken, and that was really the tone of both that speech. Quite emotional at one point, getting read, talking about how these decisions weigh heavy on him as a person with his son, but completely outraged, saying, we will find you, we will hunt you down. This morning, he'll be assembling with his national security team at 8 a.m. And what is so difficult going forward is we heard from General McKenzie, we heard from the president, is that these attacks, these threats of these attacks still exist. So they have a few days to evacuate everyone, at the same time making sure they are thwarting off more suicide bombers or IEDs through the likes of vehicles.
Leon Panetta, I believe on CNN, goes the other way, Anne-Marie, and says this will extend our stay. Is that a point of discussion this morning?
Well, we do know the president had directed the Department of Defense and the State Department to drop those contingency plans, but we heard from the president yesterday. He did not say he's with extending that deadline. And then right after that, there was a briefing with his press secretary, Jen Psaki, and she said that because the intelligence community and because of these threats from the likes of ISIS-K, that's who they assessed, conducted the suicide bombing yesterday. That is the reason why they must get out as soon as physically possible.
Anne-Marie, what's sentiment like among military commanders right now?
I would say it's a bit mixed. You know, there are some who think that they should get out as soon as possible because you see what we had yesterday. And of course, that the killing of tragedy of 13 service members who were there really in humanitarian effort to make sure they can evacuate American citizen and Afghan allies. And then you have others who say, many who say we should have stayed in Afghanistan for years to come. It was a security force in the region. It also was a way that you can keep an eye on Pakistan and their nuclear arms, keep tabs on Iran and China. I would say it's a mixed feeling, but I would say more so many in the military would have preferred to potentially stay. The president yesterday, though, did say with the drawdown, he grouped up everyone tactically, and the military did say that they would not need Bagram Air Base to get out. I thought that was something interesting and a part of the story that we learned yesterday.
How much pushback has there been from Democrats, fellow Democrats, to President Biden and how he has handled this?
Pushback from both sides of the aisle. Obviously, the Democrats are still in support of the president, the leader of their party. But there's been pushback in the sense that they want hearings and they want briefings and they want a complete hot wash to see what went wrong in terms of, was this intelligence, was this policy, about why you had Kabul falling as quickly as it did. Many assess that Kabul could fall in potentially months, some said years, but you continuously hear that many did not think it can fall just in a weekend, the expedientness of how it fell. So this is why Democrats are certainly pushing for that. Republicans, though, are calling from everything from the president taking the 25th Amendment and resigning, as well as his impeachment.
Yeah, and Marie, I think you nail it there. It's not if we're getting out, it is how and the way in which this withdrawal occurred. On that note, it's interesting. We heard from General McKenzie yesterday in the 3 p.m. hour and told us that we're now sharing intelligence data with the Taliban. We've given over biometric screening, fingerprints of everyone who has helped us. How are we ensuring that the Taliban doesn't now go hunt those people down?
Well, General McKenzie was saying that they didn't give exactly all information to the Taliban, but they give enough so that when the security checkpoints, they can make sure that people are able to enter. It's very unnerving for many Americans to hear that, given the fact that the Taliban were the ones that were harboring Al-Qaeda and Osama bin Laden. And just yesterday, we heard from a Taliban spokesperson saying there's no proof that Osama bin Laden was the individual responsible, the terrorist responsible for the September 11th terror attack. But the Taliban right now is the security outside the perimeter of the airport where the U.S. troops are not present. And General McKenzie said that it is because it is mutually beneficial for them. The Taliban want us out, but no one in the White House, the Pentagon, the State Department trust the Taliban.
Emery, they've got to get to the Sunday talk shows. Who will be the voice for the president? Who will represent the president as America considers this across networks Sunday morning?
It's a good question. I don't know what the plan is in terms of the communication, the public relations of this on Sunday. I imagine it will be Secretary of State Anthony Blinken, especially as they want to continue pushing forward the fact that Afghans are leaving. They are now at these lily pads in Doha or Cairo, other places around the world, and they'll either be going to America or Germany or Denmark, the United Kingdom. And then potentially from a security point of view, you could see his National Security Advisor, Jake Sullivan, also on the Sunday shows. We just don't know yet. Also, they'll all be working this weekend. How much time they will have to go really talk to the press. This is an incredibly precarious, dangerous situation right now at the Kabul airport because they've made it clear that they are expecting more attacks.
Emery, thank you so much. Emery Hort on the North Lawn of the White House this morning. Lisa, I look at this as an overlay, and the pandemic is an overlay, and it's just interesting this August so different.
The images out of the Dulles airport, I think that this to me
Tell me about that. I missed that.
I missed that. A lot of Afghanistan refugees have gone through the Dulles airport, and you could see pictures of planes backed up. They're not being allowed to leave yet. So some of them were on there for 12 hours or more, and they were getting various things like diapers, like slippers, because people came on the planes without shoes because they were rushing out to just try to exit before the Taliban took over. But there are such human stories in the fear that has overtaken so many people in their haste to leave. Some heartbreaking images, Tom.
Taylor, what did you see in your reading over the last day that really bears fruit? It's important?
Anger and tone deafness. You have Nancy Pelosi frolicking in San Francisco, and I've heard a lot of people
Well, tell us about that. I mean, this is your neck of the woods. What does it signal that Speaker Pelosi is frolicking, as you say?
Either ignoring the issue or hoping it'll go away. And I've heard a lot of people asking why they haven't been called back and gotten briefings on what is going on. Call us back to recess, or from recess are some of the calls that I hear.
Taylor Riggs in for Jonathan Ferro today. We hope Jonathan is well. It's an extended. What is this, Lisa? Are we out to a 3-week sabbatical here?
Let him take some time off. I endorse it. I hear taking time off is actually really great.
Really?
Yeah.
I wouldn't know.
I better. I want to try it out.
The chairman of the Federal Reserve at 10 a.m. on radio, on television. Good morning. Bloomberg Surveillance. Good morning, everyone. Tom Keene in New York with Lisa Abramowicz and Taylor Riggs. And Taylor has our data. Taylor.
I do. 2 days ago, I did not have the data. And Rafael Bostic said, Taylor, we need a data check before my data check. So here we are with a double dose of data checks. We take a look at a lift up in the futures, of course, as we push forward not only to Jackson Hole, of course, which is the big news of the day, but some of the geopolitical concerns that we had yesterday when you had a bigger sell-off. And then, of course, a lift up today, recovering from some of that. You see a lot of stability within the bond market at a 134. Well, really well behaved here, as you saw stability yesterday, and that carries through today as we push forward to the chairman's speech at 10 a.m. You change the board and you're really seeing stability within the safe havens as well. Typically, when we talk about some of these geopolitical events, Tom, we're thinking about the Swissy, the yen, any movement there. There was little movement yesterday, little movement today. So really, it's the equity market that has the reaction that you get a lot of calm in cross asset areas. There was no calm in Peloton. And Romaine, I hear your Peloton bike is now $400 cheaper than it was yesterday.
Romaine's got a Peloton in every floor of the house plus a summer place.
Yeah, exactly, Tom. You know, I tried to ride that thing into work. It just doesn't quite work out that way. Look, Peloton, look, we had these earnings last night, Tom. Taylor was there. She saw what happened. And you really can't sugarcoat this. They did beat on some of the top line numbers, but the real concern here was you have a company that has a lot of potholes ahead of it here. You're talking about paid digital subscribers missing in the most recent quarter. The guidance on revenue for the current quarter, that's coming in at about 20% below street consensus. A big price cut here on that original bike, a price cut of about 26%. Throw all of that into the pot, and then you add in a disclosure of material weaknesses in some of its accounting practices surrounding inventory. That's why you're seeing the shares down about 9%. We should point out, of course, Peloton, this was the second best performer in the NASDAQ 100 last year in 2020. As of yesterday, it was the third worst performer in the NASDAQ 100, a 10% drop today. Certainly not going to make matters any better here. Also, keep an eye on Affirm Holdings. Of course, this is a big installment loan fintech company, if you want to call it that here. Peloton is its biggest customer here. It gets about 18 to 25% of its revenue from Peloton. At least that was based on some of those first quarter numbers that we had here. Yeah. So the shares are weaker here in the pre-market as well. That company has actually talked about the idea that it's trying to diversify a little bit away from Peloton. It'll be interesting to see if they're willing to give any commentary about what transpired last night. And Gap to the upside, a big credibility play here for Sonia Singhal and her first full year here as CEO. A relatively decent quarter. A lot of that, though, driven by the Athleta brand, not necessarily some of the other brands like Old Navy, Gap as well, and Banana Republic. Flip up the board here because, of course, all the focus is going to be on Jackson Hole and that 10 a.m. speech by Jay Powell. Some of the potential movers here could be a lot of those bank stocks. A lot of what's going to feed into this, of course, is a reaction that we see in the yield space. We've seen a lot of buying come into some of these fixed income ETFs this week. Kind of interesting. A lot of people seem to be making a bet that there's not going to be any real change here. But if you do get some movement in those yields, you could see a move higher here or lower in some of the bank stocks. You could see a move higher or lower in some of the tech stocks, which of course have valuations that have been aided by this rock bottom yield environment. And then keep an eye on some of the miners as well. Could see a little bit of a move here in gold.
Romaine Bostic, thank you so much. Greatly appreciated. Look this afternoon, too, the close. I've been waiting for this. We begin our economic coverage of the morning's festivities, and we start strong with Stephen Stanley of Amherst Pierpont, their chief economist. He is shockingly acute at the American economy analysis. What kind of American economy will greet the chairman this morning?
Good morning, Tom. I think the economy is a little off the boil relative to where it may have been a couple months ago, but it's still very strong. I think that the bottom line, the big narrative continues to be that demand is outstripping supply. So you've got all these supply constraints, and that means strong growth, but not as strong as it maybe could be. And it also means a lot of inflation pressures.
The history of Fed, and this will be in the papers at Jackson Hole, Mr. Stanley, is the idea that central bankers love to keep their choice set wide, their options open, and the mathiness is they want many degrees of freedom. How many degrees of freedom does this chairman have?
So, yeah, I think, markets like certainty, right? So the markets have been looking forward to this speech for weeks, and they want Chairman Powell to tell them exactly what he's going to do and when he's going to do it. And that's just not going to happen. I think what you're going to hear, though, the Fed had told us that they were going to give us advance notice before announcing a taper. And I would argue they've pretty much done that. You look at this statement in July and then the minutes, the further discussion of what happened at that last meeting in the minutes. And the Fed has basically told us that they intend to taper before the end of the year, to me, that's fair warning. So the question is really, there are 3 meetings between now and the end of the year, September, November, December. Which one is it? And I think they've told us they're very data dependent. And I would not expect Chairman Powell to lock himself into anything before he sees the next employment report.
And then there's a question of the market response to the potential tapering, which is still on a schedule that is somewhat unknown. We are dealing with the easiest financial conditions in history. If you take a look at the Goldman Sachs Financial Conditions Index, how much will those financial conditions tighten if the Fed starts to taper?
Well, we only have one data point to look back to, which is the tapering that occurred last time around, 2014. And really, there wasn't a dramatic impact. So that doesn't mean it's going to be smooth sailing this time around. But I think that the bottom line is that the Fed is incredibly easy. And one tapering step in and of itself doesn't really change that fact. But markets are forward looking. And I think the big question for the markets is, not so much what the pace of tapering is going to be or when tapering is going to end. It's when are we going to start to see rate hikes? And what happened in the last instance back in the prior decade is that when the Fed started talking about tapering, market participants jumped to the idea that we were going to start to see rate hikes pretty soon. And the Fed has worked very hard to try to divorce those two, but in reality, they are linked to some degree.
Stephen, in the meantime, keeping conditions where they are, how much is it actually still helping the labor market?
I don't think that asset purchases are doing anything to help the economy at this point. As I mentioned before, supply is failing to keep track with demand. Fed policy stimulates the economy by stimulating demand, and demand is already too strong for the economy to match. So you've got labor shortages, you've got material shortages, and really at this point, the Fed continuing to buy assets is just piling onto that, in addition to creating, more and more froth in the asset markets. As you suggested, financial conditions are as easy as they've ever been. And that's really just not appropriate at a time when the economy is very strong.
And it's interesting, even the Bank of Korea hinted at this, that they said despite the Delta variant risk, financial risks outweigh all of those. And that led to their unexpected hike. Are we starting to take cues from other central banks who were saying financial bubbles might outweigh the risk of a Delta variant?
I think the opinion on that probably varies from FOMC member to FOMC member. You have heard some of the more hawkish members talking about that in the last few days. And so I think there are people around the table who do feel that way. I think at the end of the day, it doesn't really matter whether you're looking at financial conditions or economic conditions. I mean, there's just, if you were to take a fresh look at this and say, okay, what should we be doing right now? There's literally no argument that that the Fed should be buying assets at this point. I mean, the economy is just way too strong. Financial conditions are way too easy. So the Fed is kind of stuck with the policy that they put in place before. And the question is, how do they get out of it in a graceful and least disruptive way?
So just to pinpoint it, there's nothing that $120 billion a month is doing that $100 or $80 billion a month couldn't do, right?
The economy just doesn't need it. I mean, we could go to zero tomorrow and there'd be a big shock in the financial markets, but I don't think it would, at the end of the day, I don't think it would mean very much for the economy.
Stephen Stanley, thank you so much for really getting us started on this eventful morning. Mr. Stanley, and of course, hanging on every word at 10 o'clock, as we all will. Those headlines coming out, and Michael McKee will really talk a lot about it. Lisa, what's so great is Michael McKee, with all of his earned prestige, has really lined up an eclectic list of warm bodies to pontificate.
You put it so nicely.
Thank you.
Put up some warm bodies, and they're going to come and talk with us.
These guys are not going to say the normal blah, 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 are they?
I'm a warm body.
Coming up at 8:30, Rafael Bostic, Atlantic Fed President, and later Philadelphia's Patrick Harker, and Dallas Fed President Robert Kaplan. You said that you were interested to hear what Rafael Bostic had to say, and he was interviewed by Reuters, and he actually said he did think it would be appropriate to start tapering in October should the labor market continue to hold in. So a little bit of a hawkish tilt there. And I guess that the question is, how much does it matter, right? Is it really just the big three kind of driving the boat? Fed Chair Jay Powell, Vice Chair Rich Clarida, and John Williams of the New York Fed.
Yeah, but Taylor, keep this up. This is really important. On radio, folks, we're showing images of Rafael Bostic, Harker of Philadelphia, and Kaplan of Texas. And Taylor, I mean, I know you've done this. You've been down to the J.P. Morgan house on Madison Avenue at 34th, and in that room, he saved America. And the outcome of the Panic of 07 is we need to have a central bank, except the other cities don't trust New York. We need Fed members spread around the country. And that's really what this is about.
It's really interesting. I'm going to just go back on Lisa's comments. The note I have in my inbox is now a voting member says, let's get started. We are 4 for 4. Rafael Bostic saying, let's do this as quickly as possible. And this comes after you had Kaplan, Bullard, George yesterday, of course, the non-voting member saying that, well, let's do this. Let's do this now, sooner than later.
Yeah, Lisa, non-voting members are people that have decaf chai tea. I mean, it's like, you really,
I'm the token warm body today, Tom.
Yeah, that's okay. Well, the token warm body switched to black coffee a la Abramowicz, and that's a good and wonderful thing. Taylor Riggs with us today, and we value that. And she's quoting Euro Swissy. Get off her case. Stay with us on a Friday. Euro Swissy right now, if my eyes can find it, 107922. Where else do you get Swissy to 5 digits? This is Bloomberg.
With the First Word News, I'm Rich Gupta. That deadly attack in Kabul has shaken President Biden's Afghanistan exit strategy. A pair of bombings killed at least 13 U.S. service members and 60 Afghans, and it renewed criticism from allies and lawmakers about the way the U.S. is pulling out. The president has vowed to go after the terrorists. He's also pledging to stick to the August the 31st withdrawal date. President Biden and Israel's Prime Minister Naftali Bennett will meet at the White House a day after the original meeting was delayed following the bombing in Afghanistan. The two are expected to discuss their divergent approaches on Iran. The U.S. favors a diplomatic agreement to stop Iran's nuclear program. Israel has said it may use secret attacks. There's a chance that Audi could build cars in the U.S. The CEO of the German automaker, Markus Duesmann, spoke to Bloomberg Television about the chances.
Discussions on a possible production in the US are ongoing, but we don't know at the moment what the result will be. But we do have factories where we produce platforms that Audi also uses. So it is an important point. US market is super important for us. The customers are super important for us. And the likelihood of us producing in the US is there, yes.
Duesmann also said that Audi will stop making hybrid cars when it phases out combustion engine vehicles in 2033. China has issued its most comprehensive warning yet against the excessive work culture of big corporations. Authorities spelled out how the so-called 996 practice is illegal. That is, working employees from 9 a.m. to 9 p.m. 6 days a week. There's been a growing backlash in China against the punishing demands of the private sector. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rich Gupta. This is Bloomberg.
The threat from ISIS is extremely real. We've been talking about this for several days. We saw it actually manifest itself here in the last few hours with an actual attack. We believe it is their desire to continue those attacks, and we expect those attacks to continue. And we're doing everything we can to be prepared for those attacks.
The general from Alabama, Mr. McKenzie, General McKenzie, speaking yesterday on the horror in Kabul, of course, out of the Citadel and leading the charge for the Central Command. Right now, Lisa Abramowicz, Taylor Riggs, and I are honored to present to you Mark Kimmett, Brigadier General, retired Brigadier General, former Assistant Secretary of State for the Bush administration. General Kimmett, thank you so much. You came out of West Point, and you had to wander up to Camp Stanley in Korea, which wasn't a Hollywood TV set of MASH, but it was the real deal back in 1954 with real danger. We face real danger today in Kabul. How do we adapt and adjust on this Friday afternoon in Afghanistan?
Well, I think there are two issues. One are the near-term issues and the long-term issues. The near-term issue, we tighten up the security, we push out the perimeter so that the screening is done further out by fewer people. And candidly, we quit asking permission of the Taliban to protect our troops. In the long term, we've got to understand the implications of the Kabul bombing and understand that that's a recruiting poster for every terrorist outfit in the world, and we better start getting ready to adapt to this new pre-9/11 period that we're going to be going through.
Lisa and Taylor have some important questions. I have to ask the difficult question, which alludes to Section 60 at Arlington Cemetery. How do we defend people like you against suicide attack?
Well, the most important issue is how do we defend America against suicide attacks, and that is continue the policies that we've had, which is unflinching offensive operations, fight them forward, don't wait for them to come to us.
General Kimmett, going forward, how concerned are you about the strategic importance of Afghanistan and the U.S. not having a footprint there at a time of increasing chaos?
Yeah, I don't think we have a strategic interest in Afghanistan except to prevent it from becoming yet again another safe haven and sanctuary for terrorism as it had been pre-9/11. We're already seeing indications that it is, that everybody's now coming back to this ungoverned space and they're suiting up, for lack of a better term. We need to not have the pre-9/11 view of just keeping an eye on things there. But as we see these terrorist training camps and we see these activities and hear these activities being planned, we've got to take action against these camps through airstrikes. And candidly, sometimes we're going to have to put our people on the ground to make sure that these people never have a chance to achieve a critical mass to attack us again. Because they look at what's happening in Kabul and they say, it's time to go after the Americans again. We've shown weakness, and we can't show weakness going forward.
General, is there political capital to do that at a time when most people in the United States were for withdrawing the troops and when, frankly, the allies of the United States perhaps don't trust the commitment to go in and to have their backs?
Yeah, well, first of all, I don't want to talk about political capital. The fact remains most Americans agreed with the withdrawal, but they have not agreed with this debacle that we're seeing over the last couple of weeks. Those of us that have watched this for a long time, had policy positions focused on this, believed that we should have done this at a longer pace during the winter, not the fighting season, and we should have left a commitment on the ground to continue to put some backbone into the Afghan army. The sloppy way we did it, this shambolic way we did it, I think is directly demonstrated by what happened yesterday.
And as of yesterday, I mean, what do you think of we're asking terrorists to support us in fighting the other terrorists? And General McKenzie yesterday said the Taliban was our front line of security. Somehow that suicide bomber got through to the U.S. forces as that second line of security. Unfortunately, the suicide went off, but thank God it didn't get on the airplane. Are we trusting the Taliban enough to stop those suicide bombers from getting through to American forces?
Well, we shouldn't be trusting the Taliban at all. Since the Doha talks, they have demonstrated their unwillingness to abide by any agreement or commitment that they've made. Look, this isn't an evacuation. This is a hostage situation. We're not doing an evacuation. We're asking the Taliban to release these hostages. I don't know who's kidding who, but the Taliban can't be trusted, shouldn't be trusted.
Right.
And this strategic communications campaign they're running seems to have a lot of people fooled.
General Kimmett, we have had a lot of academic experts on, and they really emphasize the tribal nature of society among Sunni and Shia. You are truly expert at tribal tensions from the Levant all the way over east into Afghanistan and indeed to Pakistan. Please advise us on the new relationship America will have with a fractured Pakistan.
Well, first of all, this is less about the Sunni-Shia divide, and it's more about tribal politics. And candidly, it's about Pakistan's supposed national security concerns, where they want to use Afghanistan as sort of a forward border between them and India. They don't want to be surrounded. Candidly, even though Pakistan is expressing grief and sorrow for what happened yesterday, we know the Pakistani fingerprints all over the support of the Taliban, and candidly, it could very well be their support for ISIS-K. This is a country that harbored Osama bin Laden for years, and the relationship that we have with them is somewhat questionable. But they have 40 nuclear weapons, and we certainly don't want to have their government overturned and taken over by a bunch of tribal types inside of Pakistan.
General Kimmett, before we let you go, you were talking about the messiness of the operation, and I want to talk about some of the strategy. What would the rationale be for abandoning the Bagram Air Base and not just and focusing resources on the Kabul airport?
Yeah, look, I'm a little bit conflicted about that issue with Bagram Airport. Yeah, it's more secure, but it's also much further out, and the Taliban would have set up checkpoints for anybody to get to the Bagram airfield. So yeah, I think it's a convenient excuse, but Bagram, while it was easier to defend, it would have been harder for people to evacuate to because it's so far away from the city of Kabul.
General Kimmett, what do you tell the man, the woman coming out of the class of 2021 at West Point?
This is a long war. It's been going on since 9/11. And it's not going to stop anytime soon. You need to look at what your predecessors from the last 20 years have done to defend this country, and you better ruck up and be ready to defend it as well.
Mark Kimmett, we look forward to speaking to you again. Mark Kimmett, our retired Brigadier General, and of course working with the Bush administration as Deputy Assistant Director of Defense for the Middle East. Lisa, just extraordinary comments there by someone informed.
The idea that going forward, this is not going to end anytime soon is a key point. The idea of the fact that there are going to have to be airstrikes and potentially even more people sent out there eventually.
The 8 o'clock hour upon us, 2 hours away from the speech of the chairman. Michael McKee has entered the building. That's a good thing. This is Bloomberg. Good morning.
What I'd like to see out of Jackson Hole is for the central bankers to say, this is an emergency policy response.
The sense of their long-term views on employment, I think, is arguably the most important thing to focus on.
My own thinking is that tapering is not going to start in this meeting.
Powell is going to try not to make big waves.
The earlier the Fed tapers and the more aggressive they are in tapering, 10-year Treasury yields probably will not rise that much.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
It's here. It's Fed Day. Good morning. This is Bloomberg Surveillance on Bloomberg Television and Bloomberg Radio. John Ferro, Tom Keene, Lisa Abramowicz. John Ferro very much off. Taylor Riggs very much in on this Fed Day, on this August where markets are basically meandering. Tom, understanding this economy has been so difficult. Can we actually learn anything from Fed Chair Powell today?
I'm not sure what we're going to learn, but what we're going to learn is they're going to extend forward. This is, as I've said many times, Lisa, ex post, ex post, ex post. They are beyond data dependent. And I'm sorry, the most important thing on an August 27th is September 3rd, the jobs report.
Yeah, what data are they looking at? Is it all jobs or is there something else
that's a loaded
that's pressuring
question.
them?
This is a loaded question. There's a hard data, the soft data, but certainly the labor dynamics of this nation, Lisa, they've got to be more front and center than they've ever been before.
And Taylor, I got to say that one thing that people say is that they're watching very closely the stock market, and should the stock market be disrupted in any material way, any hiccup will make them actually reverse any potential tapering or tightening in any capacity. Is that sort of built into markets at this point, the people who you're speaking to?
You're certainly not seeing it right now as we get a lift up in futures, though I would argue Stephen Stanley nailed it at the bottom of the last hour, really hinting, Lisa, at some things that you and I have been talking a lot about, where what is $120 billion a month doing that 100 or 80 couldn't do? Anastasia Amorosa, the top of the last hour, saying, well, I don't know. I mean, what is the financial risk at this point? Do maybe some of the equity markets? I hearken back to the Bank of Korea saying the financial risks are outweighing the virus, and that is why they are raising rates.
Taylor, I'm glad you mentioned the Bank of Korea. The idea here here that they actually are concerned about financial conditions. Just want to bring this from Rafael Bostic in an interview just recently. He was talking about not expecting the taper to upset markets in any way, and then said basically trying to divorce tapering from interest rate hikes, saying they are two distinct things, Tom. This is what people are looking for. Can they effectively get this message into markets?
I'm glad you bring this up. It's an international event, and this is an international Jay Powell. There's no question about that. I really want to underscore, folks, that Kansas City does everything they can to bring in people from around the world. And, you may not see that in 2021, but we can't forget that it's an international event. Let me run through the markets here quickly here. Time is precious in this 8 o'clock hour. Futures up 10, Dow futures up 65. The VIX was 17 handle, 18.10 on the FIX, an improvement over where we were yesterday afternoon. Real yield gives me no information. Steepening yield curve a little bit, 110 basis points, and the yield 1.36%. We'll leave it there this morning. We need a broader, larger view, and at State Street, that's what they do. They're looking at institutional money, retirement money, more long-term money, and Lee Farage starts us strong in this hour. Lee, the traders will trade, but you guys have to worry about long-term duration. Do you reallocate off this Fed, or is it steady as you go?
Oh, I think it's steady as you go off today. I think Jay Powell's objective is going to be try and leave taper on the table, but upset the market as little as possible. Right? If he can get out with markets virtually unchanged today, and we've still got the taper expectation for later this year, he'll have done his job. And I think that's what we're looking at. It's going to be about the meeting on September 22nd, or as you said, the jobs report next week. I think we've flagged Jackson Hole so much, but I think the risk is that really we get little out of it that's new, quite honestly, today from him.
Lee, can you build on this idea of trying to separate out taper from a rate hike and how effective the Fed has been and could potentially be in doing this?
Yeah, I think they are two different things. I think you have to think about QE as an emergency measure. It's a liquidity measure, right? QE first came out when markets were collapsing, you couldn't find a clearing price, and they stepped in as a bar of last resort. That's very different from interest rate hikes. Interest rate hikes are designed to slow an economy that you think is getting ahead of itself. Two very different tools. Yes, they both, in theory, do the same job in terms of the monetary policy accommodation, but the motivation for the two of them should be two very different things. So just because we taper, which means they're lifting their foot off the accelerator, doesn't mean then it's time to hit the gas, which is interest rate hikes. So they should be seen as two very different things. The market being the market, they're not seen as two different things. They're seen as a continuum. But really, we should try and get away from that. And I think that might be one of Powell's sort of objectives today as well, and maybe over the coming months, is to separate the two things out. And maybe the comment from Bostic this morning is the first sort of salvo of that next sort of messaging operation by the Fed.
Yeah, Lee, it was Anastasia Amoroso at the top of the last hour saying that QE is here to help solve a demand problem. We don't have a demand problem. We might have a supply problem, but we don't have a demand problem in this economy. Why then is QE being used, and is it effective?
Well, it was used, it was needed when it was started last year. We had problems then, we had liquidity problems in the market, we didn't have buyers. The problem then, it becomes a crutch. It becomes a crutch for the market. It becomes a crutch for the Fed. The objective is, do they want to get out of QE now? Yeah, of course they do. But they want to get out without upsetting the market. And this is why this has been the most drawn-out policy change I think we've ever seen in history in terms of being flagged. They do not want to taper tantrum like we saw in 2013. So it's signal. And this is basically where we are. They need to get out without upsetting the market. Does it work in terms of stimulating the real economy? Not today, not now. But if you get out and you upset the market, we see a big decline in equities, that could hurt consumer sentiment that's already fragile. Look at the Michigan report we had a few weeks ago, right? We can see the consumer is still fragile, Delta is out there, etc. The jobs market is still, there's a lot of uncertainty still there. If you start reading headlines about Wall Street being in trouble because of the end of QE, that has a big impact on sentiment, and that's what they want to avoid.
If the Fed does start to tighten and effectively, or not tighten, but starts to taper in the near future, do you expect the dollar to get an additional wind, to strengthen even further and potentially disrupt some of what we've seen in terms of international progress?
I don't, so long as the taper comes alongside more economic optimism, or at least no increased economic pessimism. I think one of the big reasons we saw over the last few weeks for dollar strength was this idea that the Fed was going to taper regardless of lowering growth expectations. We've started to see downgrades for growth expectations this year, but there was this fear the Fed was on this sort of autopilot. Kaplan's comments last Friday sort of reassured, and that's why this week we've generally seen the dollar go down and we've seen stocks go up. So as long as we get that flexible message from Powell today, which I think is, he's got one objective today for me, is to keep two objectives: keep taper on the table, but let the market know we're flexible, we're not on autopilot. As long as he gets that across, so when they do taper, we're doing it into a period of strength. That shouldn't mean the dollar strengthens. It's if they taper into weakness and suddenly the market starts to worry and you get the risk of the risk-off buying of the dollar, the safe haven buying. That's what we saw over the last month or so.
Jim Karen over at Morgan Stanley says fair value on the 10-year at this case is a 170. Do you agree? And what is the path to 170?
I think that's high. I mean, I think we have to have a discussion at some point about the neutral rate. The Fed still have it at 2.5. That's way too high. If we look at where are we in terms of the labor market, where are we in terms of demographics, where are we in terms of productivity, I would argue probably fair value is a little bit lower, not massively so. And we're having this theoretical discussion about fair value, but I would probably put it 1.5 rather than 170. And where do we get there? We drift up to it in the next 12 months or so. As QE gradually gathers momentum, we drift up towards it. But no dramatic big rise in yields for me.
Lee, thank you so much. Wonderful way to start this important hour. Lee Farage with us with State Street, head of their macro strategy this morning. We get lucky, Lisa. We get lucky with a great booking team that's done so much work. Michael McKee, yeoman's duty on making Jackson Hole special for us to go to 10 a.m. But then you get really lucky. And folks, this is where you make your luck. We're like, yeah, okay, Gita Gopinath, she's going to show up. IMF, she's going to have a paper. I'm sorry. It's the paper of this symposium.
The idea here of trying to link the interconnectedness of monetary policy and fiscal policy at a time of both fronts being blasted at an economy that is so uncertain. I mean, this to me, it's sort of how do you get your arms around an economy that was stopped and then restarted with economists just getting it wrong again and again? I
mean, Taylor, I'm sorry. I'm going to read the vice chairman Blinder from Princeton, where she took her PhD, and Gopinath, and also Eric Leeper of the University of Virginia. This is the arch conundrum of the era. How did we get where we're linking fiscal with monetary? It's a new world. Eric Leeper, world famous at this.
Some would argue that we didn't get the fiscal in the last recession, and that was the issue coming out of 2008, 2009. Some, of course, are now linking that they like the fact that there is a fiscal, that there is a monetary policy, though there are some concerns on both sides about what the fiscal really looks like.
We're supposed to be out there. Lisa, can you see you and me at the Pioneer Grill before the chairman speaks? It's a great 1950s diner, and I'm having the Swiss Lager grill breakfast, and I got my PDF of the paper
a reality
open
check.
reading it.
Michael McKee noted that it's 40 degrees right now in Jackson Hole. We'd be sitting out there freezing. You'd be drinking your chai latte. I'd be drinking my espresso.
Mike's having bison at the Mangy Moose.
No, I'd be, I'm thinking, maybe a Primo beer from Hawaii. Maybe a Coors 3-2 special. Gita Gopinath, arguably our conversation of the day. We do that next. This is Bloomberg. Good morning.
With the First Word News, I'm Ruchika Gupta. President Biden is telling terrorists the U.S. will hunt them down. The president spoke after bombings outside the Kabul airport killed at least 13 American service members and dozens of others. Islamic State has claimed responsibility for the attack. A divided U.S. Supreme Court has lifted the Biden administration's moratorium on evictions. That ends protections for millions of people who fell behind on their rent during the pandemic. Justices said landlords are suffering irreparable harm. They also said that the CDC lacks the authority to impose the eviction moratorium. Tropical storm Ida is forecast to grow into a powerful hurricane in the coming days. It's already hitting oil and gas production in the Gulf of Mexico. Oil companies are evacuating some of their facilities there. Ida is forecast to strike Cuba today, reach hurricane strength over the Gulf tomorrow, and make landfall in Louisiana or Mississippi Sunday or Monday. China reportedly is taking steps that could thwart the ambitions of tech firms that want to list abroad. Dow Jones reports that the government plans to ban companies with large amounts of sensitive consumer data from going public in the US. The move could give Beijing more control over the complex structure Chinese tech companies use to sidestep restrictions on foreign investment. It is a victory for Apple over critics who say the company has too much power. Apple has settled a wide-ranging class action lawsuit with US app makers, but it did so without agreeing to major changes to its policies. Apple will pay $100 million in settlements to developers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Fed had a bad experience the last time they floated a taper at Jackson Hole. So most likely this is not the place where they're going to float the taper more aggressively, simply because of the history.
Drew Mattis of MetLife on the monetary and fiscal ballet of Jackson Hole and what we can expect in a speech here in less than 2 hours. Again, I'm Michael McKee with a stellar cast to give perspective before, then, and after the speech. Right now, Gita Gopinath with us with the International Monetary Fund and their chief economist, their director of research, Maurice Obstfeld, will be on the podium later at Jackson Hole today. Someone else who has held that position over the years. Gita, thank you so much for joining us this morning. Before we get to the affairs of Jackson Hole, Gita, I am required to address a bit outside your remit at the International Monetary Fund, and that is what all are watching, which is how the IMF will adapt and adjust to Afghanistan and the Taliban. This has to do with special drawing rights. Explain to our audience the choice set that the managing director and all of you at the IMF have with these unusual events in Afghanistan.
Hi, Tom. It's a pleasure to join your show. Now, SDRs are allocated to all the member countries. Now, which countries can actually use the SDRs depends upon whether the government in that country is being recognized by the membership of the IMF. And at this point, with the recent developments that we've seen, which just are heartbreaking, there is no recognition. So at this point, the SDRs will not be available to be used by Afghanistan.
If we can look at your panel today with the former Vice Chairman Alan Blinder and also with Leeper of Virginia as well, it is to me the most interesting event at Jackson Hole. And I'm going to be honest, Gita, it's more interesting than what the chairman's going to say. We live in a time where we've never seen linkages of fiscal and monetary policy. It's literally we're doing MMT. Within your panel, will you people discuss modern monetary theory? Are we doing MMT in 2022?
So, Tom, no, I don't believe we are doing MMT. It's a decade before the COVID crisis was one where everybody was complaining that monetary policy cannot be the only game in town, and that was appropriate. And then COVID struck, and fiscal policy came to town in a big way. So we've seen interaction of the kind that we've never seen before. But it was necessary, it was needed for the kind of challenge the world economy was facing, and it helped prevent a much deeper recession. I mean, our estimate is that the recession would have been 3 times worse last year had it not been for both fiscal and monetary policy support. Now, that said, we have to be very clear why this is good policy, because ultimately, central bank decision-making has to be controlled by central bank priorities, central bank goals. And so central bank independence has served countries very well. And it makes sense to do quantitative easing and asset purchases as long as you're doing this independently. This is not about being pressured by governments to do monetary financing. You're meeting your goals. You're keeping inflation expectations anchored. And that's what the difference is.
Gita, this is such a delicate dance. How do you avoid politicizing the central banking community at a time when low interest rates that they're helping continue really is what is allowing some of the fiscal impulse that we see in Washington, D.C.? How fraught does this become with inequality as a focus for the Federal Reserve, for central banks at a time when that really is the purview of fiscal policy and not monetary policy?
There are some things indeed that fiscal policy is just much better place to address. And again, issues of inequality is a great example of that. Now, when we look at which countries are able to do large-scale asset purchases, it is countries that have built up very credible central banks, very transparent central banks with good rules-based policy making. So we have to keep that in mind. I mean, the exception doesn't make the rule. You have to maintain your reputation for keeping your eye on inflation and inflation expectations. And if you do that in good times, and then when you have hit by a crisis, you can do exceptional measures. So, we are living in times of low interest rates, and I suspect that will be the case going forward for many years. So this is a challenge that both fiscal and monetary policy has to deal with. And I would bring in there what's happening in financial markets, because what we are seeing, of course, is very high valuations and, frankly, complacency in financial markets. So there's very little room for surprises at this time. And this is exactly going to be the challenge, which is what we will see in Jackson Hole, which is how do you communicate to be very clear about when you're going to move without creating tantrums.
Gita, there's also the flip side of this, that easy monetary conditions can plug a hole and actually take the pressure off fiscal policymakers from actually putting through some of the policies necessary to bridge some of the issues in society that Fed policy is increasingly becoming aware of. How do you sort of view that, the idea that when the Fed creates this calm, creates this stasis in markets, it can make people, at least in Washington, D.C., feel like there isn't as much of a problem?
I mean, that exactly was the problem before this crisis, right? I mean, everything was left to monetary policy and fiscal policy wasn't doing anything. This time around, at least in the advanced economies, we have seen the recognition that monetary policy cannot do it all. One of the messages I will make is to make sure this continues, and this is not a one-off intervention that happened with fiscal policy, that this is durable and this continues, because monetary policy cannot solve the kinds of problems you're talking about.
Gita, one final question. I'm going to get you in trouble here. My apologies up front as well. We have had a wonderful set of Federal Reserve chairmen, including a guy named Bernanke, who I think you have a nodding acquaintance with. We've got Clarida of Columbia holding forward on monetary theory and others. Talk to me about the reappointment of a non-PhD economist as chairman of the Fed. Do you care that Jerome Powell isn't a PhD economist?
I think Chair Powell has been doing a great job in very difficult times. And no, I don't care whether he has a PhD or not. I think it's important to get the right inputs from all kinds of people with all kinds of backgrounds, and he's been very clear about that, and he's been reacting very well to the kinds of advice he's been getting too.
Dr. Gopinath, thank you so much for joining us today. Gita Gopinath at the International Monetary Fund. As I've said earlier, it is the panel. I wish they had a paper, Lisa, but it's just a panel at Jackson Hole.
It's a panel. I imagine the debate to be heated because the issue of political independence for the Federal Reserve is a really important one to maintain its credibility. At the same time, as you mentioned, the MMT aspect here is key. How much are they facilitating fiscal policy in a deliberate way?
She did not want to talk about Stephanie Kelton's work, did she, Lisa?
No. You're going to call that out, huh?
That was a rude question I asked, wasn't it?
Those are the best.
Yeah,
I mean, honestly, it's a real question, though. Everyone's talking MMT. Yeah. She's like, no, it's not MMT.
One day, Willem Bouter was so angry, he came out of the double doors and bowled over Michael McKee. He just leveled Michael McKee in front of the bear at the lodge of Jackson Hole. Taylor Riggs, Lisa Abramowicz, and Tom Keene. It's a special morning. The president of the Atlanta Fed next. This is Bloomberg. Bloomberg Surveillance, Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Thrilled you're with us this morning. Ferro out, Riggs in. Thank you, Taylor Riggs, for joining us and helping out this morning. Futures up 10, Dow futures up 71, and a Seattle slew of economic data coming out here. It's important data as well. I don't know which number is important. Michael McKee will tell us as it dribbles out. There we go. There's the data, Michael.
We are just looking now for the income and spending numbers, getting them. Personal income up 1.1% in the month of July. That is a significant jump up from the prior month of June when we saw a 0.1% rise. Spending up 0.3%. That's a drop down from the 1% we thought that we had in June, and the 4% was anticipated. It appears that people may have cut back on spending. Is that a COVID impact? We don't know at this point. The numbers that really matter to the Fed and to the markets today, the PCE deflators. The Fed follows the PCE as their personal inflation indicator. The month-over-month rise, 0.4, a little bit less than last month's 0.5. The core up on a 0.3 basis, which leaves the year-over-year numbers at 4.2%. That's up from 4% last month. It is significantly above, of course, it's more than double the Fed's target of 2%. The core at 3.6%. Is a 0.1 up as well. So it looks, Tom, like we are not out of the inflation woods yet. If you thought that we were going to start to see inflation fade away,
perfectly timed. Is the Fed in their press conference is avoiding talking to Michael McKee. The chairman will trot out the Dallas trimmed, this one, that one, the Atlanta data, and my favorite, the Cleveland inflation data as well. Are we going to see that today, away from all the taper stuff? Is he going to come out and say the inflation I see is not what we see on the Bloomberg terminal screen right now?
Well, it's a matter of nuance how you say it. He's going to say that they think that what's happened in inflation is supply chain problems, the restart of the restart of the economy, and that it should fade. Now it's gone higher, faster than they thought, and may last longer than they thought. But Lisa, it does seem there doesn't seem to be anything in here off the top of it to suggest that he would be wrong.
And I take issue with the idea that it will fade, because will it fade? Do we count this as fading if it fades in 2 years, 3 years? I mean, some of these supply chain disruptions are going to be ongoing. Just to give you a sense of the market reaction, there isn't much of one, which is sort of interesting considering the fact that this edifies, Mike, the view that people are spending less in the face of the increased Delta variant, that services perhaps are getting a hit, which could potentially have ramifications for some of these upcoming numbers. I mean, do you think that this is something that the Fed will be watching, that yes, inflation is picking up, but it's because of things that are beyond their control? And when it comes to spending, you're starting to see that stagflation light kind of behavior with things slowing down.
I think you hit the nail on the head, Lisa. The Fed can't do anything about a supply problem. Their job is to improve aggregate demand with low interest rates. So if they start to taper, it isn't really going to affect the price level of things at this point. The only issue would be, do they start having a psychological effect on people who are afraid of inflation and therefore asking for more money and trying to get in front of a wage price spiral? Not that we have one, but that is certainly the fear of everyone who's old enough to have been around in the 1970s.
Mike, it's interesting. There seems to be a disconnect between what the economic models in the textbooks are telling us, that inflation is transitory, it'll pass, it won't increase at the same rate, and then the people on the ground, and particularly when you hear from senators, which means that their constituents are telling them inflation is hurting me and it's hurting consumer sentiment, as we get in the University of Michigan data that comes out at 10 a.m. Where is that disconnect, and does the disconnect get resolved?
Well, there's a couple of different places. One is that the average person knows what they're paying for things, and the basket put together by the Labor Department for the Consumer Price Index and by the Bureau of Economic Analysis for the PCE doesn't always reflect what people's personal experience is. The other is why we developed the core rate, because the two biggest things that people pay more money for are gasoline and food, and they're always noticing food. And so when those go up, and we have seen food prices rise for reasons that have nothing to do with COVID COVID or supply chain problems, then people start to get worried about inflation. And so the Fed has a sort of PR problem with that. Now, could this last for months and months? Well, maybe. It all depends on the progress of the disease, which I suspect is a line you're going to hear from Jay Powell today.
Very good. Michael McKee with us wearing many hats this morning. And right now we're going to rapidly digress here to a gentleman like Paul Volcker from New Jersey, Rafael Bostic. What an interesting path out of Harvard and Stanford. Really first-rate academics and a different Fed president, Michael.
Indeed. And now the president of the Atlanta Federal Reserve, Rafael Bostic. And we welcome you to Surveillance this morning. You're in Atlanta where it's going to be a lot warmer. I looked this morning, Rafael, and it was 37 degrees out on the back lawn of the Jackson Lake Lodge. So in some ways we're better off. It's not as beautiful, but in some ways we're better off. Let me ask you first about the numbers that we just got. 4.2% on the year-over-year headline PCE, 3.6% for the core. Is that out of line at all with what you were anticipating, and does that maybe put more pressure on you to decide you would like to see a sooner taper?
Well, Mike, first of all, I'm glad we're not sitting out in 30-degree weather. That makes for a much less comfortable interview. And for the numbers that came out today, I've been in studio, so I have not had a chance to look at the numbers more deeply. But I would say this sort of number is not a huge surprise for me. We know that there have been a lot of price pressures, and those have continued. I heard you guys talking before about the notion of transitory, and when I talk to businesses, what they've told me is that this is episodic. They do believe that this is really driven by the pandemic circumstance, but what it's also become clear is that this episode is going to last longer than people expected. So we're going to figure out how to incorporate that into our modeling. I would say for me, what I'm seeing is really consistent with the outlook that I had before. So I'm still comfortable that we're on a good trajectory with the economy, and we should still see fairly robust growth.
Let me put you on the other side of that big mahogany table at the Fed, and those who might argue for a delay. Is there an argument there? Because what seems to be happening is a problem on the supply side, and you guys address the demand side.
Well, it's certainly true that there are supply side challenges, and we've all heard many stories about supply chain issues and trying to get goods to product to meet the robust demand that's out there. I'm definitely worried about that and thinking about that. What I would also say, though, is that what we have seen, and businesses consistently tell me they are having record volumes. The demand is super strong, and so I don't think that pushes in a different direction than the types of things that we're thinking about in terms of removing some of the accommodation. I think the economy is performing extremely strong, and any weakness that we're going to see is just pulling us off of very high numbers initially.
There seems to be a feeling on Wall Street that if you end tapering, and particularly if you do it quickly, that will remove a support from the equity markets. The Fed has been contributing to the big rise we have seen in the indexes, and maybe even to inflation with QE purchases. How much do you worry about financial market stability with this switch in policy coming up?
Well, I always worry about financial stability. I think it's important that we make sure that our financial system remains strong and resilient so that it can provide the services that are needed for our economy. What I do think, though, in terms of our policies is that we're really aimed at two other things. We're looking at maximum employment and stable prices. I think that we're doing pretty well, making good progress in both, which suggests that we should be trying to get our policies back into a more normal situation. We've been at a very extreme level of accommodation, and I think that the strain of the economy calls for us to pull off of that a little bit and let the economy stand on its own. We still have a fair amount of energy and momentum. I think that we can do our tapering faster than we have in previous episodes because of that momentum. And my expectation is the economy will continue to operate in a strong way.
Well, we were talking earlier about whether the inflation impulse that we're seeing now will last longer than you anticipated. Is the idea of getting the taper underway, and you have said get it done fairly quickly, so that you have some freedom to be able to address interest rates if you need to?
Well, I mean, certainly, I think it's important that we move one tool and one lever at a time. It's much more complicated to communicate what we're trying to accomplish with policy if we're moving interest rates and doing things on asset purchases at the same time. So, getting the asset purchases done is going to be an important thing in terms of the sequencing of our policy. But I do really think about them in very different ways. I think about a lot of the asset purchase impetus coming out of the deep recession that was triggered through the pandemic. And as the economy has moved further and further away from those lows, I think the need for those purchases starts to decline. And at that point, I think we should move on to other things. Once that's done, I think what I'm going to do is really look at the data and have the data inform me as to how I should be thinking about when we should do liftoff with interest rates. Right now, I have that projected as the end of 2022. But as I always say, a lot's going to happen between now and then, and that will really inform the actual decision that we make in terms of when we start to move interest rates.
Well, when you talk to CEOs in your district, or even the mom and pop stores in your district, what are they telling you about how long they think this inflation will last?
Well, they actually don't talk about it usually in terms of inflation. They talk about it in their ability to meet product demand. And so business leaders that I talk to tell me that supply chain challenges are significant. What we thought were going to be, or what they thought were going to be short-term challenges, are starting to look like they're going to last a bit longer into 2022. And that has implications for what's going to happen in terms of prices. But I do think, and I think it's important for everyone to keep this in mind, this is all part of an episode. And so I've moved away from transitory or permanent and really try to talk about this as an episodic period of inflation. And for me, with a long episode, the thing that I'm going to be most concerned about is whether people start to take the length of the episode as a signal that they need to start doing things fundamentally differently. Because if that's true, then a lot of the relationships that we've seen historically may not hold any longer, and we may need to think about our policies differently. So a lot of the surveys that we're going to be doing on inflation expectations and the like, those are going to be the things that will inform what makes the best sense for policy moving forward.
Rafael, the theme of this conference, the title is Macroeconomic Policy in an Uneven Economy. At this point, do you think that the $120 billion of monthly bond purchases helps even out the unequal recovery, or do you think it exacerbates, at this point, given the recovery in the labor market, some of the inequalities, given the fact that lower rates and better financial conditions tends to help wealthier individuals more because of their assets?
Well, I think of the purchases, the goal is really to make sure that the economy stays robust so that people can get employed. Because if you don't have a job, then you're going to have a higher level of precariousness, and that precariousness could trigger and translate into significant hardships. And I think so what I'm trying to weigh is sort of the hardships or the potential for hardships that many at the lower end of the wealth distribution could face without a strong economy, versus some of the benefits that are going to accrue to those at the top because we have a strong economy. And for me right now, the precariousness side is of more concern, in part because of how the pandemic has played out. We know that in this pandemic, jobs at the lower end of the wage distribution have been hit much harder. And so there is an imperative that we make sure our policies are in position so that they can come back more quickly. That is starting to happen now, and for me, I found it heartening that a lot of those gaps in terms of job losses and categories are starting to narrow. And that gives me some comfort that the policies have been effective.
Mike McKee, why don't you drop in here for one final question with the good president from Atlanta?
Well, let me point out that the good president from Atlanta is one of the voting members of the Open Market Committee this year. So what you say really matters. And I'm wondering, I'm sitting here listening to what you're saying, and I'm thinking of how the print headlines are going to say, Bostic joins group of hawks. I'm wondering if this is really hawkish or if it's just time. Is there at some point, would anybody notice in terms of market interest rates if you start cutting back on QE purchases?
So I actually think that the markets will not respond very strongly to this. The economy is in a very strong way, in a strong position, and I think the asset purchases at this point have been something of an insurance policy. I think that we don't need that insurance nearly as much as we have in previous episodes. And because of that, I think the markets are going to really absorb this pretty smoothly, and we'll see the economy continue to just roll on.
Rafael Bostic, you more than anyone I know inside the Beltway has thought harder and harder about our nation's social policy, our fabric. Your CV out of USC, et cetera, is extraordinary. You talked years ago about trying to get the doors wider in America, having to do with housing and the black experience in America. Where are we right now? Can our institutions, and particularly this Fed, get the doors opened wider?
Well, I think we're definitely going to try. And let me step back and start by saying, the gaps in home ownership are as large as they've ever been since we've started tracking this. And that means that there is a challenge that we face in terms of families of African American and Latino backgrounds getting assets that allow them to accrue wealth. What I'll tell you is for the Fed, our monetary policy and the policy framework that we announced last year is really designed to make sure that the employment market, the labor markets work better for all. And we are also advancing a number of other things. We're convening, so we have a Racism in the Economy series to highlight a number of the barriers and potential solutions. We're working for solutions in communities to try to make those differences, to really change how the economy works for people, and make sure that our institutions are well positioned to succeed. So I think there's progress that can be made. And I'm going to work hard with my colleagues to push to make that happen.
Dr. Bostic, thank you so much for joining us today. Michael McKee, 1 year ago tomorrow, Washington in a complete uproar over race. I mean, we forget so quickly that's where we were 1 year ago today.
Yes, and the Fed has really adopted that as a major issue for themselves. They've reset their policy now to take account of broad and diverse inclusion in the labor market.
You think it's for real? Charles Evans started this in Chicago, and this is a profound shift for our monetary authorities, isn't it?
It is. The question is, how do they measure it? And they said when they adopted this idea that you can't really measure it, but they're going to do what they can. Obviously, monetary policy, a very blunt tool.
Michael, I'm sorry I didn't wear my beige suit this morning. You and I would have looked great in Jackson Hole beige this morning.
I was looking for your cowboy hat and bolo tie.
The bolo tie was already selected. It's got, like the teal, the
turquoise.
Albuquerque turquoise more look as well. Lisa, what do you got in the next hour?
Well, we all have, because Michael McKee is continuing our special Jackson Hole coverage along with us. He's going to be speaking with Patrick Harker, Philadelphia Fed President Robert Kaplan of the Dallas Fed, and of course, James Bullard of the St. Louis Federal Reserve. I do wonder this dovetail between we have a very strong economy at the same time that these asset purchases are still supporting some of the progress. Seems to be an increasing dissonance, Tom, and I wonder how that's reconciled in these conversations.
It is. We will see a really interesting group there, particularly, it's just the geography of the nation here as we consider Chairman Powell here in an hour and 10 minutes. Futures up 12, Dow futures up 80. Just a churn. It's an August feel to the market, awaiting the chairman's important comments. I was thrilled when the staff told me, guess what? Dambisa Moyo can darken the door. She is absolutely first-rate academics and a wonderful cross-section of thinking globally and thinking culturally about our institutions. With Zaka Investments co-principal, Dambisa Moyo, of course, with so much experience with corporate boards nationwide and worldwide. But more than anything, her books thinking about the larger picture. Dr. Moyle, thank you so much for joining. Is Chairman Powell the central banker to the world?
Hello, Tom. I'm happy to be back here. That's a wonderful question. You know, about, I think it was 2013, I attended Jackson Hole, the Fed meeting there, and that was the debate. We understand that the explicit mandate for the Fed is very much leans into the United States, but clearly as a reserve currency and given the importance of the United States at this moment in time, but also more generally, there's a very clear argument that you cannot think about an uneven economy and just think of the United States. And I think this is a very, very fundamental point that I'll be raising today as I participate in the meeting.
When you participate in these meetings, you will hear Blinder, Gopinath, and Leeper talk about the linkage of fiscal and monetary policy. Dambisa, I'm going to get you in trouble here. Is this the first Jackson Hole where we're practicing Stephanie Kelton's MMT?
Well, that'll be interesting to watch. I think there are a lot of skeptics around that in the room. And it will be interesting to hear those people who will stand up and defend MMT. Really, if you look at the agenda, it feels to me that it's quite focused, quite curated towards questions around inflation, around growth, and equitable growth, as you were just touching on a moment ago. And of course, I think everybody's going to be buzzing around regarding the trade-offs between tapering and interest rates. And I think that will bring in the question around the real economy versus the financial economy, as you've intimated a moment ago.
And there's a disconnect when you take a look at the impacts and the real impacts and the real economy from higher inflation and the way in which it has sort of started to damper consumer sentiment. How do you see the fixing of the disconnect between what the economic textbooks are telling us that inflation is transitory versus what real people on the ground are saying?
Well, to my mind, and this is a perspective from the boardrooms in which I serve, I mean, there's no doubt about it. And, we heard it a moment ago, inflation is here. I mean, we are seeing price movements in raw materials and logistics. There are still questions about how that will translate into wages and whether that, to use old-fashioned terminology, it's going to be transitory or permanent. I do think that in terms of what tools the Fed will decide are most important, if we really are concerned about inflation, as some of us are, I think we will lean into more of a rates discussion, because that will lead into the discussion of how important it will be to support and manage the real economy. I think a lot of the conversation regarding taper obviously hits very much home for financial assets and financial markets. People, insurance companies, pension funds, I mean, in a stylized economy, love to think about the taper as being more important, but ultimately for the real economy and for questions around growth as we go into potentially a very weak 2022, really are going to be focused on the question of rates, it seems to me.
When you see that growth, a lot of criticism after 2008 is there wasn't enough fiscal support to also do a proper handoff from monetary. This time around, do you see a proper handoff between monetary having to do all the work versus fiscal picking up some of the slack?
Well, it feels like that way. I mean, we've got this massive infrastructure package. I mean, it's kind of hard to argue that there's nothing going on the fiscal side. I think for me, the greater concern is the bifurcation between developed and developing markets. There's a real question to be asked about whether or not the United States and European countries that have enjoyed support from stimulus, that they've had from quantitative easing, but also the packages on the fiscal side can support and continue to drive economic success when the rest of the world has got 1% vaccination rates in some regions and really a real prospect for low growth in 2022.
And now, folks, Tom Keene enters the Dambisa Moyo timeout chair. Dambisa, you have massive cred with global corporate politics and boards. Give us your belief now on where ESG is heading. Is it really entrenched as a belief and architecture for strategic thought, or is it the fad of the moment?
Look, it is absolutely entrenched. That doesn't mean there's not a lot of work to do. I've been serving on corporate boards for over 10 years now, and I've seen it evolve from something that was sort of CSR and ring-fenced as an afterthought into, we're going to build foundations where companies will provide support to employees and pass over money for organizations to do something, in a very separate way, to it being fully integrated into how we do business. Ultimately, we are in the business of allocating capital. I mean, those are the companies that will outperform, both in terms of competing against peers, but also against the markets. We have to allocate capital, and our ability to allocate capital with ESG in mind, to my mind, is absolutely going to be a differentiating factor for companies in the future.
Dambisa, thank you so much. Dambisa Moyo, of course, a guest of Jackson Hole. She will be part of these panels, these discussions today as we drive forward the conversation. Taylor, I'm really, really interested. Folks want to sell forward to stay with us on radio and TV. Michael McKee with James Bullard of St. Louis is going to be something.
It indeed will be. And of course, the main event as well, 10 a.m., of course, with Jay Powell. Really interesting conversations, Tom, all morning, the likes of which started with Jim Caron saying 170 on the 10-year appears to be fair value. Ending it here with Dambisa, of course, saying that if you're worried about inflation, don't have a taper conversation. You need to have a rate hike conversation.
I want to go back to this board here. Mr. Harker, Philadelphia, of course, the Fabric, really, really interesting regional district in Philadelphia, maybe a microcosm of manufacturing and mid-sized small business, an eclectic Philadelphia Fed with some important economic data. Kaplan of Texas, carrying on the Texas tradition, absolutely unique Fed, is led by and founded by, I'm going to say the modern era, by Robert McTeer. Robert Kaplan here really saying, let's get going and let private enterprise heal this nation. And then Bullard of the regime change. There's been a few. Somehow I think Michael McKee will ask about the regime change at this Jackson Hole. Please stay with us on radio and television. Experts on the Fed, presidents on the Fed, and then the chairman at 10 a.m. This is Bloomberg. Good morning.